All right, got 19 of you up in here with 14 likes already. That is awesome. Thank you so much for being here. In this video today, we are going to be discussing deflation. Now that we have inflation peaked out, coming down, we got the CPI at 3%, there's going to be a lot of talk of deflation that's coming up. And the Federal Reserve is more scared of deflation than they are inflation. And that's something that I've been going back to these two speeches that I use quite a bit inside of the videos and our discussions, going all the way back to November 21st of 2002, right? What am I trying to say? Back in 2002. There we go. Ben Bernanke's speech talking about deflation, making sure it doesn't happen here. And now this is really interesting. Some of the things that they were talking about back in 2002, in that how it is that they were going to deal with the fact that they were going to be running into the lower bound. Right now, if you're not familiar with the lower bound is zero on the Fed funds level, right, where they can no longer drop interest rates any further. Now, this speech, let me draw a little mark here, was right about where this orange little, well, I tried to draw an arrow, it just turned out to be a smudge, but right about there. So you could see right after Ben gave this speech, it jumped up a little bit and then eventually hit the lower bound, came up a little bit back in, what was it, 2018, 17 and 18, only to fall again during the pandemic and then now back up to where we are today. Now, the Fed funds rate. This is a very interesting thing to follow when you're thinking about what it does to the economy, right? Because a lot of people think about when the Fed adjusts interest rates, they are thinking, okay, well, the Fed is adjusting interest rates on car loans or house loans or credit cards or something like that. That's not what the Federal Reserve is doing. The Federal Reserve is adjusting what they refer to as the effective fund rate. And that's what this chart is. It's the effective fund rate, you know, on there. And now this effective fund rate, the easiest way to understand it is the interest rates that the big banks lend to each other on an overnight basis. So at the end of the day, some of the banks would need reserves, some of them have excess reserves. The ones who have excess reserves would lend them to the ones who are in need of reserves. And that would be, that overnight lending rate would be the effective fund rate. Since then, the Federal Reserve has moved from this limited reserve system, which is where these big banks would end up lending to each other on an overnight basis to establish the Fed funds rate. They've moved it from that was a limited reserve system, moved it over to an abundant reserve system, where now these banks are all loaded up with a bunch of reserves and they have accounts at the Federal Reserve called interest, or the accounts on excess reserves, which they get paid an interest there, and they get paid an interest at the repo facility. And now these are fairly new ways to establish the Fed funds rate that has not typically, you know, was not typical of the Federal Reserve. That's only been since the last few years that they've actually done that. Now, going back to this speech, so now that we kind of understand what the Fed funds are and what the Federal Reserve is doing, that Fed funds rate, that starts to move into all the rest of the interest rates that are out there. So you think about it, when a big bank borrows money from another bank or from the Federal Reserve itself, that is like the safest place you could ever possibly park your money. And then after that, you can kind of go into like ideas of like treasuries or bonds or, you know, loans to people's houses, cars, stuff like that, and it starts getting riskier. So understanding that's where like the Fed adjusts interest rates. They don't really actually tap into the credit card market and start adjusting interest rates specifically there. It's more the Fed funds rate. Now, in this speech, this is the first one. It's deflation, making sure it doesn't happen here. This is from Ben Bernanke, November 21st, 2002. And in this speech, one of the things that he says, like almost right off in the beginning of the speech, is, I'm confident that the Fed would take whatever means necessary to prevent significant deflation in the United States, and moreover, that the U.S. Central Bank, in cooperation with other parts of the government as needed, has sufficient policy instruments to ensure that any deflation that might occur will be both mild and brief. Now, that right there, they knew there was going to be issues, especially when it came into running into the lower bound of zero, right? Because they had already known. You got to think, this is like back here, Bernanke didn't have any of this available to him. It was just like they were, I got this little scene, they were on their way down, right? So Bernanke gave that speech right there, and then eventually later all this happened. But they were on their way down, and they were very concerned about running into the lower bound and what it is that they were going to be able to do once they hit that lower bound. And that's where, you know, this speech really comes in and says, you know, hey, we got a lot of things that we can do. I'm not going to read the whole speech. It would just be too much. And besides, there's only really one thing in here that I really wanted to kind of let you guys know about. But this other part, right? This is what he says in this paragraph. However, a deflationary recession may differ in one respect from a normal recession, in which that the inflation rate is at least modestly positive. Deflation of sufficient magnitude may result in the nominal interest rates declining to zero or very close to zero. Once the nominal interest rate is at zero, no further downward adjustment in the rate can occur, since lenders generally will not accept a negative nominal interest rate when it is possible to instead hold cash. At this point, the nominal interest rate is said to have hit the zero bound. And so right there, they knew, like, if they get to the zero lower bound, that there is no longer an adjustment to stimulate the economy. And up until that point, right, they've been able to adjust interest rates to deal with recessions. They could drop them down or just, you know, be able to adjust them because they would have room before hitting the zero lower bound. And once they hit that zero lower bound, they were like, that's it, we're done. Now, what I found most interesting in this speech was how they plan on curing deflation. And this is really interesting to think about, especially since now they use so much forward guidance and signaling and what I like to refer to as credible threats. Now, listen to what he says in this part of the speech of curing deflation. He says, let me start with some general observations about monetary policy at the zero bound, sweeping under the rug for a moment some technical and operational issues. I have mentioned some observers have concluded that when the central bank's policy rates fall to zero, it's practically minimum. Monetary policy loses its ability to further stimulate aggregate demand in the economy. At a broad conceptual level, and in my view, in practice as well, this conclusion is clearly mistaken. Indeed, under a fiat, that is paper, monetary system, a government, in practice, the central bank in cooperation with other agencies should always be able to generate increased nominal spending and inflation, even when the short-term nominal interest rate is at zero. So they're saying, like, you know, even though we don't have the tools and everything else around there, once we hit zero doesn't mean that we're out of the game yet. There's still ways we can stimulate. And he is saying right there with, in practice, the central bank in cooperation with other agencies, right, should always be able to generate increased nominal spending and inflation even when the short-term nominal interest rate hits zero. So he's saying there, hey, we can come up with some other tools that we don't have yet, including with some other agencies. We could come up with a way of creating some short-term spending, right? Or increase nominal spending and inflation even when the short-term rate is at zero. Okay. He goes on, the conclusion that deflation is always reversible under a fiat money system follows from a basic economic reasoning. Okay. So this is where you're saying, it's just like, if we have a fiat currency, we can always do this, right? Or at least this is what Ben Bernanke is trying to say. Again, this is back in 2002, long before all the issues that we were facing today. All right. Because they knew back then that we were going to run into something just like we have experienced. Okay, going on. A little parable may prove useful. Today, an ounce of gold sells for $300, more or less. Wouldn't that be nice, man? $300 an ounce. This is not that long ago, 2002. Okay, $300 more or less. Now, suppose that a modern alchemist solves his subject's oldest problem by finding a way to produce unlimited amounts of new gold at essentially no cost. Moreover, his invention is widely publicized and scientifically verified, and he announces his intention to begin massive production of gold within days. What would happen to the price of gold? Presumably, The potentially unlimited supply of cheap gold would cause the market price of gold to plummet. Indeed, if the market for gold is to any degree efficient, the price of gold would collapse immediately after the announcement of the invention, before the alchemists had produced and marketed a single ounce of the yellow metal. You hear that? Just the credible threats alone that this is possible is going to be enough to adjust the markets, even though they're at the lower bound of zero. No worries, we can make up these stories, right? We can tell this story. Got to be credible, but we can tell the story to make it happen. What has this got to do with monetary policy? Like gold, the US dollars have value only to the extent that they are strictly limited in supply. Now, get this, right? This is what Bernanke's saying back then, right? The only reason why they have any value is because to the extent they are strictly limited in supply, which makes it very difficult to wrap your head around when you consider how much money printing is taking place. All right. But the US government has the technology called a printing press, or today its electronic equivalent, that allows it to produce as many US dollars as it wishes at essentially no cost. By increasing the number of US dollars in circulation, or even by credibly threatening to do so, right? Credibly threatening to do so, the US government can also reduce the value of dollar in terms of goods and services, which is equivalent to raising the prices of dollars of those goods and services. That is very important to think about, right? Because what he is saying right there is just the perception alone is enough to do it, right? Let me read it again. By increasing the number of US dollars in circulation, or even by credibly threatening to do so, the US government can also reduce the value of dollars in terms of goods and services. Just by threatening to do this. It doesn't actually have to go out there, right? You can just have this credible threat that it's going to happen, and that will be enough to cause the prices to go up, which is the equivalent to raising prices in dollars of those goods and services. We concluded that under a paper money system, a determined government can always generate higher spending and hence positive inflation. Almost done with this part of it here. Okay. Of course, the US government is not going to print money and distribute it willy-nilly. Right? But, okay. Although, as we will see later, there are practical policies that approximate this behavior. Okay. Normally, money is injected into the economy through asset purchases by the Federal Reserve to stimulate aggregate spending when short-term interest rates have reached zero. The Fed must expand the scale of its asset purchases, or possibly expand the menu of assets it buys. Alternatively, the Fed should find ways to inject money into the system, for example, by making low interest rate loans to banks, or cooperating with fiscal authorities. All right. Now, I'm going to kind of leave it at that. There is a ton more in this speech. I really recommend everybody go and read it. Again, it's back from 2002, so it's like, a 21, 22-year-old speech. But the things that he is talking about are the things that are playing out today, and how it is that they are planning on dealing with it back in 2002 is now some of the things that we are experiencing today, right? So, like, one of the things right off the bat, the cooperating with fiscal authorities, right? This is where, like, what are we going to do once we hit the lower bound? Trying to inject money into the system is going to be very difficult. But he is saying that there is ways to dealing with it, and cooperating with fiscal authorities. And now, again, fiscal authorities is the government. Monetary policy, fiscal policy. Monetary policy is the Federal Reserve, the financial regulations, stuff like that. The fiscal policy is government spending, right? Taxing, stuff like that. That's the fiscal policy. Monetary policy comes from the Fed. Fiscal policy comes from the government. And so one of the things that they were saying there is that in conjunction, right? Let's see here. A government in practice, the central bank in cooperation with other agencies. Now think about that, the central bank in cooperation with other agencies. This is really important to remember, okay? Because we ended up experiencing this with the setting up of all the lending facilities during the pandemic. All right. I hope this isn't boring you. You guys cool with this? I mean, I'm just kind of reading through this stuff, and I mean, I'm going into it almost 15 minutes, haven't read a single comment yet. But I really wanted to get this stuff out before we start reading through the comments, because I thought it was really important and it's good stuff. You know, and the reason also I brought it up was because there was an article I came across saying something about Elon Musk is confused about what's going on in the economy today, and that it's very strange. To me, everything that is happening in the economy was very much part of the Fed's plans. And it started back here with this, I mean, it started way before this, but if you start with this speech from 20 years ago, it can really start, you know, you can start leading up to some of the events that we are experiencing today, and then it's not so surprising. This is probably one of the better speeches that if you ever get a chance to read. Again, I'm leaving links down in the description for it. This is not that long. It's only 2 pages here. This is Monetary Policy Strategies for a Low Neutral Interest Rate World. I have talked about this speech 400,000 times. I mean, I swear, I have gone over this thing over and over and over again, but it is so important because he's basically talking about the issues that they are facing just before the pandemic, and the problems that they were facing in this speech right before the pandemic kicked in got wiped out during the pandemic, right? So here, let me read some of this stuff. Today we face an altogether different set of, this speech goes on, but I'm not going to read it all, right? It says right here, I'm going to start with this part. Today we face an altogether different set of problems stemming from a very low neutral interest rate. Okay, for those who don't understand the low neutral interest rate, what that means, and the neutral interest rate is when that Fed funds rate, the effective fund rate that we just talked about, it's when that is neither stimulating nor contracting the economy, right? Or contracting finance, I guess I should say, because it's not necessarily the economy. It ends up, you know, performing with the economy. But anyway, it's when they are no longer, it's when they're actually neutral, like they are not accommodating nor restricting in any way. They are just like, boom, right at the sweet spot, so to speak, right? Okay. Okay, let me read this again. Today we face an altogether different set of problems stemming from a very low neutral interest rate. That is the short-term real interest rate that is consistent with an economy operating at its potential alongside low and stable inflation. I don't know why they have to make it so complicated, right, when they say it, but that's basically what it is, right? They're neither restricting nor accommodating. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. Now, that is something to really think about, because nobody is really thinking about inflation being too low. I mean, it is starting to come down now, so people are starting to feel a little bit better about the idea of inflation. But for the last year and a half, 2 years, nobody was thinking anything about there being persistently too low of inflation. But that's what he is saying right here. Ironically, the problem we need to face today, or need to solve these days, is the risk of inflation that is persistently too low rather than too high. All right. And now, this speech goes on for a little while, and I want to read some of it out, because it's really important to understand what it is that they were talking about. The Federal Reserve was before the pandemic kicked in. Like they knew these issues of running into the lower bound and stimulating the economy was going to be very difficult to deal with, right? So now it goes on to say, today's low neutral interest rates reflect a culmination of trends extending back 25 years, right? 25 years of problems leading up to this. A quarter century ago, a typical estimate of the neutral interest rate in the United States was 2 to 2.5%. Okay? So that Fed funds rate being at 2 or 2.5% was neither restricting nor accommodating the economy, right? And of course, this rate moves, but he was saying that a quarter century, a typical, right? Typically, it would be somewhere around there. All right. Consistent with historical averages over the preceding half century. Since then, however, there has been a clear downward trend in the neutral interest rates in the United States and other advanced economies, with the current estimates ranging from 0 to 1.5%. Dang, right? Now the Fed funds rate anywhere from 0 to 1.5% is neither accommodating nor restricting the economy. That gives them almost zero room to stimulate, right? Because if they can't drop it below the neutral interest rate, then how is it they're planning on stimulating the economy? Typically, they would want to drop interest rates around 5% to stimulate the economy, and well below the neutral interest rate. But now at 0 to 1.5%, they essentially have no room to fight. Again, this is 2018, right, that they were talking about this. Okay, here we go. 3 main global trends appear to account for the bulk of the decline in the neutral interest or neutral rate over the past quarter. One is demographics. This is important. Populations are aging as people live longer and birth rates have fallen. The second is productivity growth, which has slowed around the world. The third is the heightened demand for safe and liquid assets, which has led to a wider wedge between yields on safe government securities or central bank reserves and yields on risky assets such as corporate bonds. Now, that's something to think about again. Like all 3 of these issues that John Williams was bringing up. Remember, this is John Williams, New York Fed president, right, of the New York Federal Reserve. And so, you know, it's kind of a big deal, right, as far as the banking system goes. But that was the 3 main problems that they were facing back in the day, was population, aging population, productivity growth, you know, global productivity growth was slowing, and the yields on the safe and liquid assets or the safe securities, safe government securities, like the U.S. Treasuries, and the yields on corporate bonds was too wide, right? So the safe and the securities were, the yields on them were too low. The bonds on the corporate debt was too high. And I'm assuming the reason why this was a major issue is because, like, when you go to stimulate the economy, you want to be able to stimulate into the corporations as well, so that they can get funding, so that they can, you know, get the money that they need in order to keep people employed or expanding their businesses or doing whatever. But if you have the yields on the treasuries so low, when you go to buy those treasuries and drop the yield, the wide range between the yield on the government bonds and the corporate debt doesn't give the ability to bring the corporate debt down either. So there's a stimulating problem going into the corporations when you have the yields so wide between the U.S. Treasuries and the governments. Now, again, he doesn't say that in here. I'm just kind of, you know, assuming that as far as some of the things that I was reading within this. But anyway, continuing on. Importantly, the onset of these trends preceded the global financial crisis, and they have continued even as countries have recovered. Although there is a great deal of uncertainty about the neutral rate, and conditions may change, a reasonable assumption is that it will remain low, not far from current levels, for the foreseeable future. So they didn't really think that there was going to be any way that those neutral rates were going to start moving up and giving them that ability to start fighting the the recessions with dropping of interest rates. They're saying there's no way. It's going into the foreseeable future and it's going to stay low the entire time, right? What does a low neutral rate mean for monetary policy in anchoring inflation of expectations, right? Or in anchoring of inflation expectations? When a recession hits, central banks may not be able to reduce interest rates well below their neutral level to stimulate the economy as warranted because of the effective lower bound on nominal interest rates. All right. So what does it mean when what does a low neutral interest rate mean for anchoring inflation expectations? Once you hit the recession, they won't be able to drop it, right? And that's what they're saying. Central banks may not be able to reduce interest rates well below their neutral level to stimulate the economy as warranted because of the effective lower bound, right? They can't drop it enough, they hit zero. This shortfall in monetary accommodations would result in a less desirable economic outcomes during the recession and recovery. In particularly, it's amazing I even have a channel the way I speak. Okay. Inflation would typically undershoot its desired target during these episodes. The persistence of below target inflation rates in many advanced economies over the past decade is a testament to this dynamic. Now, I'm almost done here, guys, and we'll start talking, okay? I just want to get a little bit more out here. Okay. As a result of the inherent asymmetry introduced by the lower bound on interest rates, an inflation targeting central bank, right, could experience inflation that is below target once we consider the average inflation rate over periods when policy is constrained and those when it is not. With inflation on average below the target level, inflation expectations will likely slip below the target's rate as well. Okay, now this is where he kind of goes into sounding like a really bad math teacher. A simple example helps illustrate this problem. Say that 80% of the time, the lower bound on interest rates does not constrain policy, and central banks aim for a 2% target inflation rate. During these good times, an inflation-targeting central bank aims to keep inflation near 2%. But 20% of the time, the economy falls into recession that's severe enough that the lower bound constrains policy. Assume that during these periods, inflation averages only 1%. So 80% of the time, inflation is averaging 2%, and 20% of the time, inflation averages 1%. The results average rate of inflation is about 1.8%. As a consequence, inflation expectations are likely to become anchored at a long-run average of 1.8% below the desired 2% target. So they're basically saying that if they don't get inflation up significantly, that it's going to get anchored well below this 2% target. There's nothing they're going to be able to do about it, and that is definitely what was taking place. If you go and you look at the inflation since basically the quantitative easings, it's hardly achieved anything over their 2% target. All right. But that's not the end of the story. This downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, the downward shift in inflation expectation raises the real interest rates. Let me read that again. When policy is constrained by the effective lower bound, a downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse, and reducing inflation even more. Even in times when policy is not constrained, the expectation of below target inflation in the future affects In times when policy is not constrained, the expectation of below target inflation in the future affects current decisions, putting additional downward pressure on inflation. In other words, monetary policy is always swimming upstream, fighting a current of too low inflation expectations that interferes with achieving the target inflation rate. Right? So again, this is 2018. They're like, man, this inflation rate is too low. The interest rates are too low. The gap between the government bonds and the safe liquid assets of U.S. Treasuries is too wide. There's too many old people. Right? There's not enough growth taking place. And this is the issues that he was talking about. Right? All right. Now I'm going to read one more thing and then I'm going to quit here and we'll start talking a little. Oh my gosh, 27 minutes into this. Okay. The second option, right? I mean, because he's talking about all these different options. He's talking about the first one, which is, okay, well, I might as well read that too. A number of alternative monetary policy frameworks have been proposed to aim to tackle problems associated with the lower bound on interest rates. Although they differ in many ways, it is useful to divide these proposals into three broad categories. First option is to maintain a basic work of inflation targeting and rely on a combination of aggressive conventional and unconventional policy actions when facing economic downturns to limit the deleterious effects of the lower bound. This carries with it the risk that inflation expectations become anchored at too low of a level. So he was saying the first way of doing it, which basically goes with their typical tools that they had been using, like the quantitative easing and all that other stuff, may not do it, right? He says the second option is the average inflation targeting, whereby a central bank purposefully aims to achieve an above target inflation rate in good times when lower bound is not constrained. Properly designed and implemented, such an overshoot can offset inflation undershoot during bad times. So the long-run average inflation rate and inflation expectations are in line with the target. right? Now that is what I believe is more taking place today than anything, is this average inflation rate over time, is why they kept the interest rates extra low, extra long for an extended period of time, to make up for the fact that they had not achieved their 2% inflation target over the previous 10 years, right? And he is saying that you're going to have this over and under kind of situation taking place with an average inflation, right? Let me read it again. The second option is average inflation targeting, whereby the central bank purposefully aims to achieve an above target inflation rate in good times, okay, when the lower bound is not constrained. Properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times, so the long run average inflation rate and inflation expectations are in line with the target. That is really where I think the Federal Reserve is. And so when people are like, man, the Fed has lost control, they don't know what they're doing. No, they do know what they are doing. They did this exactly on purpose. They needed to get the inflation expectation to go up, and the only way to do it is to make sure everybody is convinced that it's actually going to happen. Now, one of the things that I found very interesting, if we go back to Ben Bernanke's speech, is that in curing deflation, remember, they were going to create inflation to cure deflation, right? It says here that a government in practice with central bank in cooperation with other agencies should always be able to generate increased nominal spending and inflation even when the short-term nominal interest rate is at zero. Okay, think about this for just a second. During the pandemic, we had unusual and exigent circumstances in which that the Treasury and the Federal Reserve got together, right? So central banks, let me see what do you write here? So central banks in cooperation with other agencies, right? So the central banks in cooperation with other agencies, meaning the Treasury, setting up those special purpose vehicles, right? They knew about this situation 20 years ago. And they knew that they didn't know, probably didn't know exactly what it was that they were going to need to do, but they knew that they were going to have to do something of such nature. And they did not have this available. They said it. They were like, we don't have this really available to us, but we could, right? Because what did he say at the very beginning? Let me start with some general observations about monetary policy at the zero bound, sweeping under the rug for the moment some technical and operational issues. Technical and operational, meaning that they don't have the tools really to use this yet, but we can imagine that we could, and if there was an unusual and exigent circumstance, put them in there, right? I mean, isn't that what you, I don't know, maybe that's just me reading into it too much, but that's what I see when I read into that. All right. So now we think about it. We had a situation in which that the pandemic kicked in, right? And now I know everybody's going to have like, you know, well, this was unforeseen, whatever, right? And that's cool. A lot of people say, nope, it was planned. Whatever, man. I mean, you can come up with whatever reasons or excuses or issues, whatever. Doesn't matter. What matters is that it happened. And what happened with the central banks and the Treasury. That's what's important. Like, who caused it, it doesn't matter, right? It's kind of like using the analogy of like you're out there in the middle of the river out here on the Columbia, right? And there's a hole in the boat and it's sinking, right? And you got to bail out the boat, and you got people discussing like who put the hole in the boat or the best method to get the water out of the boat or something like that, instead of actually just working to get the water out of the boat, right? It doesn't matter how we got here. The fact is that we're here, right? And I mean, it kind of matters how we got here to understand why it is we're here. But the point being is this, right, is that they knew that they were going to need other agencies in order to deal with the fact that they were at the lower bound of zero, that dropping interest rates was not going to stimulate the economy, and we had a huge debt issue coming down. We needed to recapitalize everything. We needed to flood the system with dollars again, or else the whole thing was going to fall apart. And it didn't matter if we had COVID happening at the time. That was going to take place anyway. Right? So now we think about it. These other agencies, when the Treasury and the Fed got together, they set up 13 lending facilities to backstop every corner of the financial market. Right? That was like, if there was a credit card, a car loan, if there was a house loan, if there was any kind of debt that somebody wanted to take out, the Federal Reserve wanted to make sure that there was going to be somebody there to buy it. Right? And now part of this was that corporate debt lending facility. And now this is a very important one to remember, because this corporate debt lending facility was funded with hundreds of billions of dollars, like literally, I think it was like something like $650 billion, right? Some ungodly amount. This is a significant amount. You think, In 2008, the Fed's balance sheet was $850 billion. This one lending facility was funded with $650 billion. Right? That's how much of a change has taken place since then. Now, this $650 billion, this was intended to go out there and start buying corporate debt, right? They were going to be buying the fallen angels, as they called it. And these fallen angels were like the good corporations, the ones that shouldn't fail during this bad time or whatever. Now, the idea that the Federal Reserve was going to be buying this corporate debt, you know, you have to think about it. Corporate debt is a loan going to a corporation. It's like, you know, buying a piece of debt instrument, right? So when you buy a bond or a corporate bond, you are lending that corporation money. They're handing you a bond, and then eventually you'll get paid an interest rate on it for holding it. Now, when people heard this, they were like, holy crap, the Federal Reserve is going to be buying bonds, buying corporate debt. They started front running the Federal Reserve like crazy, and they're pouring in to corporate debt like in a mad style. It drives the corporate yields down dramatically. Drives the yields down on corporate debt dramatically. What was John Williams' problem? What was the second one? I forget already. How did he say it? The facing issues of let's see here. Three main problems. The third is the heightened demand for safe and liquid assets, which has led to a wider wedge between yields on safe government securities or central bank reserves, and the yields on riskier assets such as corporate bonds. Boom, problem solved, right? Corporate debt lending facility drove the yields down on these corporations to almost negative territory in some areas, right? I mean, it got them very close to the Treasury yields, one of the problems that old John Williams was having. Same thing with I mean, I don't like getting into this part, but the same thing, like I didn't follow any of the COVID stuff. Sorry, guys. I didn't read any of the numbers. I didn't follow any of the deaths. I didn't listen to any of that crap. If they talked about COVID, I didn't watch or listen or read anything about it, right? But I would imagine that a bunch of people have died because everybody seems to talk about that, right? I personally know a couple of people who died. They were kind of old, overweight, smoking. Okay, like, I mean, I don't know if it was COVID that did them in. Maybe they were just going to go anyway, but I know a couple of people who passed away. That was it. Hardly anybody I know who was healthy even suffered anything from it. I got COVID personally. I mean, I lost my sense of smell and taste. It wasn't fun at all. Right? But as far as like the deaths from it, I would imagine that the demographics issue that they were faced right there got somewhat alleviated. Maybe not completely, but at least a little bit. I mean, I'm just kind of assuming on that. The corporate debt, that obviously had come down. And then what was the other thing? I forget. Oh, productivity growth. That's the other thing. Productivity growth around the world has dropped, or productivity has dropped dramatically. Just take a look at some of the articles coming out of China right now. Like their manufacturing has dropped like 20%. Manufacturers are moving to all different areas of the world. They're getting out of the places that they were, moving to cheaper places, like mainly out of China, over to Mexico, over to Vietnam, Malaysia, stuff like that. This retooling, regrouping, this is, once it turns back on, like, you know, you got to build these factories, you got to move the facility. Once it does and fires back up, you're going to find where lots of production had failed, gone out of business, and then all of a sudden a ramping up of new production and growth. All three of these problems solved during the pandemic. Very interesting to think about, right? I mean, coincidental? Maybe? I don't know, right? I mean, I'm not confused by any of this stuff. It looked to me like the Federal Reserve got exactly what they wanted out of the pandemic, right? They got the demographics issue. They got the corporate debt to come down closer to the treasuries, and they got global growth about ready to take off. All these problems were solved. So, I don't know. I'm not confused. Like, I'm not confused by any of this stuff. The Federal Reserve is going to keep the interest rates elevated for a significant amount of time to make up for the fact that we've had so much significant inflation over the last couple of years, right? Because they're going for an average inflation. They said so right there, you know. Anyway, let's find out what you guys are talking about, since I've been babbling for 38 minutes straight. My goodness. All right, let's go look at this super chat. Thank you so much, Super Duty OHV, for the $9.99. Going into recession, depression, the purchasing power of the dollar will increase as assets go on sale. The gains of purchasing power of the dollars will outweigh the drop of the DXY index. Stack cash, gentlemen. Hey, look, there's a little heart there. Can I hit that? Oh. I can't. Oh, bummer. All right. Well, thank you so much, Super Duty OHV, for the $9.99. That's very cool of you. All right. Party time. Dishes Every Day. Go over to Dishes Every Day's YouTube channel. Go hit the subscribe button. We're trying to get her subscriptions up. See if we can't get her channel monetized. All right. Smash up the likes. Yes, please do. Good evening from Lakeland, Florida. Hey, Kevin, my man. Good to see you here. Hello from Northeast. All right. Well, it's good to see you here. Good evening out that way. Hey, yo, from a bit too sunny at the moment in California. Peace, UE. Well, peace back, Atticus. All right. Uneducated teaching the uneducated, hoping to become educated. That's us. Right on. Socialism for the rich is disgusting. Fed Now. Yeah, Fed Now is fired up. We're going to see how this kind of thing starts to implement the monetary system. I don't think we're going to see much of a change at all. All right. My Crother UE. The headliner is Rexon. Yeah, it's really fragile too. You can't hardly touch it without it disintegrating. All right, there's Rex, just like Adam 22's wife. Huh, weird. Okay. Like the stream. Hey, thank you, Andrew. Thanks for being here. Hit the like button, everybody. Yes, thank you, Dishes Every Day. Greenspan. Yeah, Greenspan was you know, that's one thing. Like the history of Greenspan is quite interesting. That dude was a hard core gold bug back in the 70s. And then, you know, what I guess I'm probably for a lot of the same reasons that I kind of like lost my belief of the, well, not belief, but like wanting of a gold standard, just simply for the understanding that if you are an importing nation exporting money, you go to a gold standard, you are going to import stuff and export all your money, and you will be you'll be in poverty, right? That's like the Cantillon effect. If we were a hardcore manufacturing state, I would be all over the gold standard. I'd be like, man, we got to load up on the gold standard, right? I mean, as a manufacturing state, producing, distributing, right? Producer saver, yeah, absolutely, big time gold standard. But as a debtor consumer, very scary thing to go into. So maybe, I don't know, maybe you saw it like that. But as an individual, I think owning gold and silver is probably one of the most important things you should do. Corporations could use employee collateral pension funds and bounce out of the recession. Interesting. Super, you are wrong. Zero recession or depression, at least for the next 4 to 5 years. Where the dice? Oh, bro, thanks. I forgot. 45 minutes into the live stream with no dice. What are we going to do? All right. Please don't read. Thanks, man. I appreciate it. You know, for those of you who don't know, I have I've gotten over quite a bit of it, but I've had a hardcore reading disability most of my life, where reading stuff, especially things like that, would have been almost impossible for me. I would have stuttered so hard through it. But yeah, but thanks, man. I appreciate it. Yeah. Instead of calling a recession, we call it a whoopsie doodle. Extends for men does not work. In fact, I think it's shrunk. What are you trying to get me to like say stuff so you can record it and go out there and blast it all over the internet making fun of me or something? Is that what this is all about? All right, this reminds me of Bible study class when I was a kid. Ugh. Really? I don't know. Maybe Bible study was fun for you. I don't know. I didn't do any Bible study, so I wouldn't know. Maybe it was fun. It was murder. Okay. What new stocks did you add to your portfolio? I haven't added any stocks to my portfolio. In fact, I'm not really going to add much as far as new stocks, right? I mean, I'll let you guys know what I do buy, but I'm going to make that move when I see the spread on the 5-year, 30-year start to widen. Right now, I don't know exactly the reasoning behind all this, except for Alan Greenspan, when asked about the indication of a recession due to the inverted 10-year or 2-year 10-year inversion on the yield curve, he said, although that is a very good indicator of a recession, what he likes to follow is the spread on the 5-year, 30-year, and when that begins to widen, it shows corporate management's willingness to invest. I remember that, and I'm thinking, okay, I have no idea what that really means, but if corporate management is willing to invest, I think that I should probably be too. So I'm not sure when, where, how to invest. Like, I'm not an investor. I don't do stocks and stuff like that. I buy Altria, right? Marlboro cigarettes, Anheuser-Busch. I don't drink or smoke, but I know a little bit about addiction, so I buy Altria. It has a decent dividend yield, 8% or something like that. I buy the ETF Russell 1000, the Vanguard ETF Russell 1000 growth stocks. I buy the Vanguard ETF Total Stock Market ETF, and I buy Coinbase, right? And those are the four positions in which the stock market that I put money towards, right? Now, I have purchased gold miners in the past and stuff like that, so I do have a little bit of other parts of the portfolio, but the only ones I'm really active on are those four. And I buy Bitcoin and I buy gold and silver, right? Mainly silver, like a little bit of gold occasionally, but mostly it's silver. And that's what I do with my money. And as of the last year and a half, because of the situation that I was put in, buying the house and paying taxes and doing all that other stuff, it has not given me a whole lot of room to do a lot of other investments like I really would have liked to have tried to do or something, or being involved with. So right now I am sitting in cash, or going to be loading up on as much cash as possible for the next 6 months, because I think in 6 months we are going to really see some really significant changes to market's perception, inflation, interest rates. I think in 6 months we're going to see a major change to it. Now, what to exactly expect, I'm not sure. Like, I don't know if it's going to be massive bankruptcies or, you know, corporate defaults or what, but I just feel that their buying power, or the buying opportunity, is coming, and if for whatever reason 6 months seems to be in my mind, right? Let's see here. What does Biden winning second term mean for the future of America? I don't know, because I don't know what that guy's up to. I have no clue. What are your expectations for the next CPI print? Well, this is something that I think a lot of people are gonna miss here, and this is really one of the things that I've talked about in the past, and it's difficult to see it, but it's happening, right? And that is the CPI is coming down, so everybody's feeling relief. Ooh, yes, finally, right? This thing is over. We're going to get some prices, at least stay steady. Might even see some deflation coming into the future. People are going to feel a lot better that the inflation has gone away, right? But there's a problem taking place right now. See, the inflation that we had experienced, everybody wants to point at the Federal Reserve. I mean, this whole thing that I talked about was pretty much all about the Federal Reserve. But that's only half of it, right? You know, there's the demand side that they are messing with. There's a whole supply side to this equation, right? And when these two are imbalanced, prices will adjust, right? So if demand is higher than supply, prices will continue to be elevated, right? If supply is higher than demand, then you have deflationary scenarios that are taking place. Now, everybody wants to look at demand. Like, this was the problem. We got all the stimulus or whatever, it caused all this demand to take place. But hardly anybody ever brings up or talks about the breakdown of the supply chain, all right? And how that never really quite recovered. And if it doesn't quite recover, then how is it that you're going to bring supply back in line with demand? So you're waiting and bringing demand down, trying to bring demand down, but then all of a sudden supply starts falling too. And demand can't find its balance with supply because these two keep falling together, right? And that's what's occurring. Think about the lack of freighters coming from China, right? All the fall in trucking price, right, to ship things across the country. Look at the manufacturing coming out of China, right? Huge drop in manufacturing. In fact, around the world, not just China, it's all over, right? Everybody's, right? This is supply coming down. Eventually, it will find its equilibrium, right? But it takes a lot longer than what anybody was ever anticipating. When I heard the Federal Reserve was saying we want help from the supply side, I was like, that ain't gonna work, right? If this is how you plan on fixing it, that ain't gonna work. It's gonna cause the inflation to continue on ever longer, right? And that's exactly what happened. So, but everybody wants to say that the Federal Reserve fouled up, right? And that's kind of true. I mean, if you think about like wanting help from the supply side, but they didn't really foul up in the sense that they didn't know that this wasn't going to happen. They knew it was going to happen, and that the inflation was going to run extra long for an extended period of time, and that they were going to keep the interest rates elevated during that time. It was very much planned. And you can see it because of, think about all the stuff that was like purposely done to damage the supply side of things, right? Remember that they were going to hire the National Guard to move stuff around. Look at what's happening even today. I mean, you're talking strikes and issues that are happening within that. So all this investment that went into the pandemic because we had this overwhelming consumer demand that really didn't exist. I mean, it was stimulus and overzealous people like doing mass orders trying to provide for this overwhelming consumer demand that really wasn't there. So mass orders went into manufacturing. Manufacturing blew up, right? All of a sudden, the manufacturer like, where the hell are all the orders? And they're like, man, we are sitting on way too much stuff over here, right? And this is the problem. It was the bullwhip effect that was really kicking in. So now all this stuff is sitting here. Nobody really wants to buy it. Prices are starting to fall in a lot of areas, or at least not going up anymore. And manufacturers are like, man, where are the orders? They're not there, right? So now the manufacturing is going to fall, right? Well, eventually demand will come down, find the equilibrium with supply, and then the supply and demand balance will finally kick into gear. People will get real excited about it. It'll take a little time, but it will get excited about it, and then growth will start to take place. Here's the only problem, right? Is that when the demand picks back up again, there's nothing there. There's no manufacturing taking place in the way that is going to provide the stuff, right, to meet the demand. So right now we have inflation falling, right? But we also have supply falling, inventory falling, production falling, right? At some point when it does start to shift, when people go back into, you know, when the interest rates fall or whatever, people go back into buying and there's not going to be the stuff there. It's going to start driving prices up. And the only difference on this time is that there's nothing there, right? There's no new stuff coming from China getting stuck out there on a freighter, you know, off the Port of LA with 100 other freighters. That won't exist, right? And so we will have real shortages taking place at that time. And that's when we're going to see inflation start to kick back up again. That's going to be a whole different scenario that people are not anticipating or expecting. How much of inflation? How, I don't know. I mean, I guess it depends on, you know, the environment at the time. But this is coming. This scenario is being set up. And I mean, I called this out a long time ago, and we're starting to see the evidence of it now. All right, did I get another super chat there? Yeah, I did. Thank you so much. Redazon, man, loaded me up with the $4.99. Thank you so much. Good evening. After Teresa Gov stimulates the Main Street, Treasury and Government stimulates the Main Street, does it concern corporation taxes will increase? Is this another reason price increase after? Yeah, I would imagine that a lot of what we saw go into the economy as far as the stimulus and money and stuff like that will get pulled back out in taxes. You know, I mean, you got to pay for all the stimulus, right? You got to pay for all the debt. You got to pay for all this stuff, and that's going to be in the form of taxes and tax payments. You know, it's funny, like one of the things that I don't know if a lot of people are kind of following this, but if you go and you look at the Treasury General account, it is getting loaded up with cash. Right? There's a lot of cash going into this account. This is the Treasury's account that they would normally use to pay the bills with, right? And I mean, I can't tell you exactly what the number is today, but if you go and you look at a chart of this Treasury General account for the last, like, you know, 15 years or whatever, just recently during the pandemic, it spiked up quite a bit, but for the most part, there really hasn't been that much cash comparatively to what it is today. Like today, there's a lot of cash, not comparatively to the pandemic, but throughout history. It's sitting in a much higher position than it normally would be. And they're loading it up even more. So there's even more cash going into this particular account. And I've even read some areas saying that they want to get it up to, like, I don't know, like some ungodly amount, you know, $1 trillion. I forget exactly what it is, but they want it significantly higher, like twice as high as it is today. And now the only thing that I can think of that would force them into this position, right, is that plan that somewhere in the new year, because they talk about this in their, you know, you can just go and Google it and find it, or just go back a few videos on mine. I was talking about it, but they're planning on doing bond buybacks. This is the Treasury buying back their own debt, and they're talking about it to deal with liquidity issues within certain spots of the bond market. Like if there's somebody out there who wants to sell this bond, the Treasury is going to be there to make sure that there is a buyer for it, so that it doesn't become illiquid. right? Which means that, like, treasuries are the most liquid market in the world. If you want to sell a treasury, it's instantly sold. It turns to cash right now. If there was ever a situation in which a treasury could not be turned to cash immediately, there would be major disruptions within the market, right? This is like a panic situation. So the treasury would never, will have, the Federal Reserve probably wouldn't either, but the treasury does not want this to exist, this illiquid position. So they're going to be there come the new year, ready to buy with a ton of cash sitting in the treasury general account. This is all lining up right now. Right? I don't know why Elon Musk is confused by this. This makes so much sense to me, you know? Alright. Let's see here. Let's get back down to where we were. Okay. My wife calls me a fallen angel because I'm overweight, smoke, and don't work out. Says I should have gone up to heaven by now, but here I am. Man. Start working out. Okay. The demographically, God alleviated. I don't know about necessarily alleviated, but I think some of the pressures that were there got alleviated. I wouldn't say it's like alleviated, you know, but all right. One of these days I ought to tear. Okay. Let's see. What are we guys talking about? I think after the Great Resignation and people getting used to sitting around with free government money, it was time for a wake-up call. I just don't think the punishment should go on hard workers. You know, again, like, I don't know. I don't look at anything going on in the economy as a good or bad thing, but just something that is, right? I mean, it's good for somebody out there. So, I mean, it might be bad for you and good for them, or it might be bad for them and good for you. It depends on the position that you have put yourself in, right? And so, like, hardworking people, I mean, believe me, I was one of them. Working class is stiff, man. I still have a working class job. I work 9 to 5, you know? I mean, even met a fan today who came in. He stumbled into the store today, and he was just like, dude, you're the Uneducated Economist. And I was like, all right, man, what's your name? Mike. And he just happened to stumble into the store. Has been a fan for years. Didn't even realize I worked at the store, and he recognized me, right? So I work a regular job. Like, this is what I do for a living. And, you know, one of the things that I have found from working a regular job my entire life is that there is never a situation in which that it is a good one for us. And never will be, right? I mean, it just won't be. If you have a regular old 9 to 5 job, there will never be an economy that is accommodating for you, right? It just won't happen. You have to have side hustles. You have to have a business. You have to have something else going on besides your 9 to 5 job, because it just doesn't do it. It will pay the bills, and that's about it. It will give you an existence, but as far as any kind of real existence, it won't, right? So it's just like, as far as punishment to the workers, yeah, it's punishment being a worker, period, you know, no matter what. All right, the name for the recession could be named an incremental difference. Good stream. Thanks for what you do. Hey, thank you, Chris. I appreciate it. You know, I'm trying to bring you more of that useful, helpful, informative information. You know, that's where I dug these things out after reading that article on Elon Musk being confused or just doesn't understand the economy or what's going on in the economy. It's just like, well, let the uneducated economist maybe explain it a little bit. And again, you know, this is stuff like, if you don't follow and register this stuff away, like me, I have a tendency to like take these little snapshots in time. Like, I put stuff away and file it and say, okay, well, someday in the future, I'm going to recall that, you know, and that's going to be like a very important thing. People don't like me for it, because, like, I'll have conversations with people and they will be like, you know, when did I say that? And I'll be like, oh man, we were driving through the parking lot at the, you know, whatever, and you said, you know, it's just like, I will recall these things. Like, if it's a particular thing, I will, like, a lot of times just log it away and just completely, like, never bring it up again, and then all of a sudden one day recall it and say, man, I remember back in the day you said this, or this particular thing happened. Yeah. All right, gold is absolutely ignorant to buy unless you are rich as hell. I don't believe that guy. I mean, gold and silver are an incredibly helpful, useful thing to buy when you are trying to get out of that third-party claim, that reliant on a third party. You don't have to worry about a portfolio at some brokerage. You don't have to worry about an EMP taking out all your Bitcoin. You don't have to worry about the dollar failing. You don't have to worry about any of that stuff, right? It is completely you, your safety, your ability to sleep at night. It's your insurance policy. That's it, right? And I think that everybody should own a little bit of it. I mean, even if you are completely broke, owning a few silver bullion is not that hard to do, right? I think it's very important. And not to mention, once you start doing that, it'll put you in the mindset of understanding monetary policies and stuff like that. It'll just kind of lead you in that direction. It's very important to have. I just don't jump every dime. Like, there was a point in my life where I was pretty much 100% in silver, and it was not good, right? Although it helped me out when I lost my, when I lost my ability to, when I lost my car, right? When the car didn't work, I was able to buy a vehicle with silver, and back to work I went. So it's a great insurance policy. All right. ZELLE was converting unused office space, turning it into employee condos. Can you give us your opinion on my super chat comment? I thought I did. Did I not? It says, getting into recession, depression, the purchasing power of the dollar will increase as assets go on sale. The gains of purchasing power for the dollars will outweigh the drop in the DYX. Stack cash, gentlemen. Yeah, well, I mean, I really agree with pretty much what you're saying. I mean, I don't have anything to really disagree about with. I think it's pretty much in line with a lot of the things that I've been saying anyway. One of the ideas of, like, you think about it. Even in this, like, where did I read it? I can't find it now because I already said it. But just the idea that the dollar will lose value is enough, right? That's what he was saying with the gold machine. Just the idea, right, that the Federal Reserve would be able to destroy the dollar's value. Just the idea that alone would create the inflation scenario, create the dollar destruction scenario, even with them not doing anything. It would just changes the people's perception of it and gets them to act on it. It really leads me to believe, why so much push for that de-dollarization narrative? Like, it was insane. Like, how much articles, how many people are talking about it. It just goes on, and I'm thinking, nah, this is a credible threat thing. This is trying to get the people to take on this narrative so that they feel that the dollar is going to be losing value or getting, out of it. They're trying to do this, right? And so, I mean, and it's totally working too. So, but thank you very much, Super Duty OHV. I mean, I wasn't trying to ignore your comment by any means, bro. Yeah. But I very much agree with a lot of everything you very much said. All right. Where were we? How do you buy stocks? Well, lately I've just been buying them through Cash App because it was convenient, and I was doing a little experiment buying stocks in Bitcoin, and it just made it convenient. So I was buying through Cash App. I've also used M1 to buy stocks. M1 app. Zero collapse in commercial real estate. I don't know if that'll happen. All right, 2030 is closer when pull the plug. Lumber is doing great along with all the mills. What are you getting at, man? All right. I buy toothpaste companies like Colgate since people always need their teeth. Yeah, that's a good one. Is going to spike 105 in August. CPI moving lower. Transitory inflation. Okay. Read his own. We read his. So the Fed will stop bond rate increase. Points. Well, I mean, I'm not trying to predict what the Federal Reserve is intending on doing with treasuries. Like, that part is, I mean, that part I'm not trying to predict that, right? What I'm looking at and what the Federal Reserve is doing with the Fed funds rate and what they intend to do with it going into the future when it comes to the inflation expectation coming into the future, right? the average inflation rate. That's what I'm looking at. That bond market is going to get manipulated. Like, I don't know exactly how or what it is, what their intentions of it, but it is very much of my mind that whether it's the balance sheet runoff coming from the Federal Reserve, allowing, bonds to just simply roll off the balance sheet and not getting replenished, if they increase that, decrease that, whatever, that participation, along with the Treasury, along with the whole world, right? There's a lot of activity taking place inside of that bond market that's going to mess with those yields. How the Federal Reserve can actively, like, pinpoint those yields without being, like, in a position in which that they said that they would be willing to buy them, I think it's going to be very difficult. Now, they might be able to adjust it a little bit with their bonds roll off, with the balance sheet roll off. Like, they could, probably play with a lot of the yields inside of that. But again, like, to have full control over it, I think you would have to have that announcement that you would be willing to purchase bonds, and I just don't think that's the case right now. Could be in the future, but I just don't think it's there. And a lot of people will disagree with me altogether, saying the Fed is buying bonds. What are you talking about? Okay, that's another one that can be up for debate. I see the balance sheet rolling off. They talk about it rolling off. They talk about quantitative tightening. This is their monetary policy. This is their strategy we're trying to predict, not whether or not we're assuming something different. I mean, if you want to take a strategy that they have screwed up, or that they are doing something far different from what they are announcing, or that their strategy is saying, I mean, go for it. I mean, you might be able to find some really good investments doing it that way. That's not the way I'm going. I'm, like, looking at the Fed strategy, trying to predict what it is that the Federal Reserve is planning on doing, and then position myself accordingly for that. Most people will look at the Fed and say they failed, right? And I'm thinking, well, here, you said that 6 months ago, right? But here they are, they're still operating. So if they failed, that means 6 months ago they were done. They're not done. They're here today. They're still operating, right? Again, back to bailing out the boat. Does it really matter if we're, like, blaming people for who put the hole in the boat, or telling people, hey, man, you're bailing the boat out wrong? I mean, you just bail out your own boat and get the hell out of here. Get out of there is what I'm saying, All right. So the Fed will stop bond rate. Okay. I make plans to get out of this country in the next 5 years. Uphill battle, president versus stairs. All right. And go where, right? Prices will be flat to lower. Unfortunately, El Salvador seems to be the best first step. Japan, if I can swing it. How can inflation be lower with capital 3 times, 4 times higher? I say CPI as still elevated. I mean, everybody says, like, all this money injection is just not good and just go away, right? But it just went away out of lumber. Like, it just disappeared out of lumber. I mean, it might come back. We might see a housing, boom. But I'm telling you right now, retail is dead. Retail is, like, I work at a lumber yard, right? I do retail sales for a living. Summertime is, like, especially the middle of July, is busy. Like, this is the busiest time of year that you could ever possibly have a busy time of year. This is it. And it is quiet. It is so quiet at the store. There's a lot happening in the sense that, like, people are willing to spend some pretty decent money. Like, I've sold some really decent sized window packages and some really decent deck packages, but for the most part, it's not a lot of walk-in traffic, and there is not a lot of construction taking place, like, the new home build boom kind of thing. I'm not seeing that at all. All right. Focus on eating healthy. Remove sugar and junk grains from processed foods from your diet. Eat whole 30 only. CPI will continue to track lower. Food and fuel are not included. TV and phones are crashing. It was transitory inflation, period. Well, yeah, like, I mean, I said it. I agreed. I mean, I was just like, man, I know inflation is painful, and I know that the money printing was just nuts. But when you do as much research into the Federal Reserve as I have done, and when you're involved with the supply chain as deeply as I am, it just gave me, like, a perfect position to see things that were much different than what you read on the news. Again, we've talked about this confirmation bias, Once you get hit with some information, that information hits you with an emotion, right? Your world's coming to an end, something's, bad's going to happen or something great's going to happen. Either way, it doesn't matter. And it turns into a belief, and then you get hit with evidence. Boom, 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 right? And then all of a sudden, you're convinced, and this is the way it is. And if that's the story you heard, right, no matter what it was, like, it doesn't matter what story was told. If that's the story you heard and you got a little bit of evidence to prove it, that's what you're going to believe. And so when you have the news broadcast pumping it out there, look at all the money printer and all this talk about money printing, and everybody's talking about the money printer and all the all the stimulus checks and all the everything, and it's just going on and on and on and on, right? And then pretty soon that's what you see, right? That's all you see. And, there's one little dude out there going, hey, man, supply chain issues, and everybody's like, who's that guy? Ain't not important, And so I'm like, what about lumber? You're like, look at lumber. Why is lumber? Why is lumber still sitting at that price that we were selling it for back in 2017, 18, right? Before everything took off. It's because it's not what everybody said it was. Things are falling in price are usually financed. Yeah, and you're going to see those come down quick. That's where, like, people ask me about the used car market, and I'm thinking, man, I don't know, new cars might not be selling and people wanting to get into the used cars. It might actually add some support to the used cars for a little while, but everybody's going to be getting out of vehicles, I think, here before too long. Expensive ones, anyway. All right. I thought 2023 would be the year of reckoning. Should have, but it artificially held in place. Anybody here watch Arjakes? I don't know how to say that. All right, the stock market is going a lot higher over the coming years. Plan accordingly. 1 XRP is worth 1 XRP. They can buy back these nuts. Okay. In 10 years, you will be able to buy 1 million XRP for a penny. All right, the Fed funds rates are going to 6 to 8%. Maybe, I don't know. I didn't think they were going to get much over 3.5 anyway, so, which I didn't. I didn't think they were going to get much over 3.5%, but really, when you think about it, they really haven't gotten much over 3.5%. The Fed funds rate operates with the lag, right? So even though they had the Fed funds at 5.25 or 5.25, even whatever, it doesn't matter where they're at. It was 6 months to a year ago that you have to look at where the Fed funds rates are to feel what it is that's being affected to the economy today. And really, the Fed still says it's like a year, but with the forward guidance and signaling incredible threats and people so, active as far as like listening to the Fed nowadays, I'm sure that that lag has been moved up much quicker than what a lot of people are trying to determine as far as like being pushed out to a year. So I think that lag is a little bit shorter than the year. Like, I think it's closer to maybe 6 months or something like that. But, who knows, really. However, it's somewhere between 6 months and a year, right? So if you go back 6 months to a year ago, whatever the Fed funds rate was there, that's what the economy is feeling today. So we get in 6 months to a year from now, we'll feel the effects of 5%. That's why I say 6 months to a year from now is going to be quite painful, because we have yet to feel the full effects of the Fed funds rate of 5%. If we go up to 6 or 8, can you imagine? I mean, and this is what 3.5 feels like, and everybody's already complaining about it. We still got more to go, a lot more. Yeah. All right. Or get a new wife. What are you guys? All right, you need better looking wife. What are you guys talking about? All right, if corporations get the money from Main Street, then it can be passed on to treasuries to buy back. I guess through taxes or something. Anyway, or husband. Back, bicep, chest, try. Oh, you guys talking about working out. B vitamins, protein. All right, start with diet. Remove sugar from your diet along with grains. Go, okay. The dude over there, $5 Canadian. Did we do this one? This is for your ongoing quest to read more. I struggled with reading too, and reading out loud is a disaster for me, huh? Keep up the good fight. Well, thank you. Well, it's one of the things that I had to let go, right? I mean, as a kid, it sucked to have to read in school. Like, I was so embarrassed to have to read in school. I hated it. I didn't want to do it. I would mumble. I would just like, whatever. And, I mean, I had to accept it. It was just like, dude, you're going to go out on YouTube and you're going to read? all right, you better get ready for that, And so I just did. It was just like, just let it go, man. Go out there and stumble through it, and that's what I do. Gold, silver is a must. Yeah. Matt, good to see you here, man. There are people I know that claim to be broke, always have money for beer and cigarettes. Yeah, and I always had money for beer and weed. When I was broke, I always, I found it anyway. Write down physical budget and follow its store cash. 99 likes, 163 watchers. Yeah, we got 110 likes. Thank you so much for hitting that like button too. It's the like button, the algorithm, the comments, and the super chats that really do it. The YouTube algorithm sees that, it grabs the video, it starts sending it all over the place for more people to join in. So I appreciate all of it, every comment, every like, and especially the super chats for supporting the channel. I can't thank you guys enough for that. So if manufacturing is down and buying down, is trucking slowing as well? Yes, it is, dramatically. Go and take a look at some of it. It's like in bad shape. There's trucking companies going bankrupt all over the place. Yeah, trucking is hurting. It is. It's bad. And one of the things, and I knew this was going to happen too, because at the store, I get calls for shipping brokers, right? They're looking for freight to haul around, wherever. It doesn't matter. They're just looking for stuff that they can put a truck under. So they call us like, hey, can we haul some freight for you or whatever? And so usually we have to tell them, hey, no, we got our own, fleet of vehicles and our vendors deliver stuff to us. We really don't use outside brokers. Those calls came to an end during the pandemic. We didn't hear anything from these guys. And then suddenly, it was quite sudden, the phone calls started coming in. Like, it was probably, I don't know, a year ago, maybe a little bit more, that they started coming in, and then they really ramped up for a while. I haven't heard so much from them lately, so I don't know if it's maybe trucking companies going out of business, or maybe if there was like a spot in there in which that, they found some freight, or I just haven't heard from them, but anyway. But yes, trucking is hurting in a major way. The dollar is spiking higher in August. We are flushing out all the excess that was in the economy the last 3 years. Yeah, I can believe that. We're going to find a lot of bankruptcies taking place, and this is the burning out of the dead undergrowth. This is a lot of the Austrian economic theory taking place. The Federal Reserve could really just sit on their hands and let free market fix a lot of stuff, right? And by fixing it, I mean letting people fail. Seriously. I mean, it sucks to think, because people, you don't want people to fail, but ultimately there's a lot of zombies out there who are sucking off of, the only reason why they live is because of the access to cheap credit. They are sucking the best talent, they are sucking the resources, they're sucking everything that is good for the economy. They suck it away, right? So if the free market was allowed to function and just burn those people out, right, then it would give them room to bring in new growth and new possibilities. All right, my lumber manufacturer is at all-time high in the stock market. Why do they mean the dollar is down? Isn't that expenses are up? So when the dollar is down, I think probably what you're thinking, and when you hear it on the news and stuff, is they are comparing it to the basket of world currencies out there, the dollar index. And so basically this dollar index started off at 100, and comparing it to a basket of world currencies, you can see, like, you can follow the value of the dollar comparatively to this basket of other currencies out there. It's been very, much lower than it is today, and it's been much higher than it is too. So really, by tracking the dollar index, you can really see how much significance it has over the basket of currencies, as you're following and tracking it. I guess that's the easiest way to think about the dollar. Dollar is down or dollar is up. How are massive forest fires affecting wood prices? And the USFS report, Firmageddon, 1.3 million acres of dead Washington and Oregon fir trees. Now, I mean, I know this, you can, the environmental impacts when it comes to, everything out there, it can be quite significant, especially when we saw what happened up in the British Columbia area with the bug infestation. That was really significant. British Columbia area is such a significant source of wood that the things that happen up there are very sensitive to the market, right? Or the market is very sensitive to that. The main reason is because of the insane amount of wood that comes out of this area and the high cost input that goes into this production of this wood. So anything that happens up there will shut these mills down right now, right? And that will start depleting inventory or, you know, increasing inventory depending on what is happening with the British Columbia area. When you have forest fires, like Oregon is a major producer of wood, right? Like Oregon is the #1 producer, I believe, of lumber. I believe that's still the case today, right? And if there is going to be issues like this, when you have issues like taking place in Oregon where it might have a particular area where you got forest fires and mills shutting down, or maybe just, you know, they just shut down production altogether, it's not nearly as significant as what takes place in British Columbia. Period. Like, it's just not nearly as significant. So to try and incorporate some of the same theories of like environmental impacts into like what could happen here in Oregon as compared to what happened in the British Columbia area, it's not the same. Well, it's not the same game, right? It's just not. So it does have some impact. It will have, you know, maybe some local impact on some of the mills here as far as the prices that they are doing at their, as what they refer to as cash, meaning like you go to the mill and you're like, how much are you going to sell me a truckload of lumber for today? They will have a price that they will sell it to you for. There's also a futures price, which is different. That's a contract for future delivery from a handful of mills that are going to deliver to the Chicago area. So the futures price gives you a good idea of where lumber is, but it's not necessarily what the mills are charging at that, you know, as far as cash at the door itself, so to speak, right? So there's a lot to kind of take in. It's not just a singular event like that that's going to impact the lumber market. British Columbia, that was decades long like event. Like that bug infestation started, I don't know, back in the 90s, I think, you know, and it finally just came to fruition with the salvage mode and everything else that was happening up there. Hey, brother, love from Australia. Well, thank you for being here, friendly ghost. And thank you for being a member of the channel, man. All right, I see some super chats popped in. Let's go find those real quick. Inspirational Nomad, thank you so much for the $2. Thank you and your family for sharing. Respect. Well, thank you so much for the support and the $2, man. All right. Thank you, Glenn, for the $1.99 Canadian. Very much appreciated, man. Thank you for the thumbs up sticker, man. Very cool of you. All right, let's get back up here. Simon, do you ask questions to ChatGPT? Which have you? I did. I said, who is the uneducated economist? Is he important? Can you tell me like what significance the uneducated economist has? And they sucked at it. It was terrible. They couldn't pinpoint me for nothing. I mean, I had to practically send them links, and I was just like, can you please do a review of this, you know, of the uneducated economist for a report or whatever? And I had them like come out with like this like essay on the uneducated economist, and it didn't even come close. Like they didn't even mention lumber once, like at all. Like I was trying to get it, like ask about myself until it would finally say something about lumber. Never really happened. Yeah. So yeah, that's what I did. I just asked the questions about myself and then got bored with it. All right, let's see here. I'll cruise down to the bottom here. Sorry for skipping all the rest of the questions. Yui, when do you think the economy will feel the pain from raised interest rates? You don't think the pain is being felt now? I mean, look at the housing market alone. Like, there's a lot of pain right there, you know, being felt. People who were wishing to dream of buying a house are looking at interest rates that are so significantly higher, causing their payments to be, they just done gave up. Like, they didn't even, buyer traffic sucks. Like, the home builder sentiment is great in every way except for buyers traffic, right? Projection, like future sales, they're excited about, like conditions, all this other stuff. Buyer traffic sucks. Like, there's nobody there. So the moment that interest rates move, I think that, you know, or move the other way, I think that the pain will be relieved. But I don't see that happening for some time. In fact, I see the pain getting worse as we go into the future, as the Fed funds rate, the lag from that really starts to impact the economy over the next year. So I think the pain has already started, you know. Glenn, no wood, lumber. All right. Yeah, go up the street and get a pack of cigarettes. Okay, if you come to the United States, don't ask for a packet of cigarettes. They'll be like, WTF. Pack of smokes. People still smoke. That's weird. What about car prices being back to all-time highs? Again, like I don't know. Like, I don't buy cars. Why people are out there buying vehicles is beyond me. I mean, cars are like disposable items. I paid $500 for this car, $1,200 for my S10. My parents just gave me an Explorer. I am, like, my cost of traveling is very low. Like, I keep that incredibly low. Of course, I don't really look that cool in my car, you know? That's kind of a bummer. I mean, if I was driving a new Camaro, I would look so cool. I would be so cool. Way cooler than this 99 Toyota Corolla. Yeah. I don't know. People buy cars. It's like one of the. I have seen some of the smartest people in the world go and blast a bunch of money on a car, and it's just like. I just don't get it. Like, I understand driving. Like, I understand driving something nice, and I understand if it's your hobby. That's the other thing. Like, I don't want to knock anybody who's, has like cars as their hobby. That's cool. Like, but just like to go out there and get a really fancy, expensive car and make like $7,000, $8,000, $9,000 a month payments so you can drive some big giant Super Duty pickup truck or something. I'm like, no, never will I do that. Like, I could just I would be so heartbroken thinking about all the money that I could be investing. All right, stocks are going up in certain sectors. The crash people talk about this year is old by now. All right. Oh, good. I need to quit. Yeah, Tango, I'm bro. Fed Now is live. What do you think about the stock market being back to all-time highs? I think it's going to be temporary. I mean, I think that over the next 6 months to a year, we're going to see a significant slowdown in the consumer, right? I mean, it's just like they're almost done with their savings. The interest rates are going to stay elevated. The lag from the Fed funds rate is going to start really impacting the economy, taking us out of the neutral position and much more into restrictive. And all that is going to be very burdensome on the corporations out there. We are going to see corporate defaults. We are going to see sales fall. We're going to see, I'd assume, the stock market fall from that. The liquidity crunch that's going to come from that. People are going to be scrambling for dollars to try and pay off their debts. They're going to be looking for them anywhere they can. They will be cashing out whatever they can in order to get those dollars to pay their debts, because it's going to mean their livelihood, So they're going to cash out gold. They're going to cash out Bitcoin. They're going to cash out stocks. They're going to probably, try to liquidate some of their bonds. That's why the Treasury is going to be there. All these things. It seems so simple. Like, it seems like it's lining up. But like, it couldn't really be any other way. But, again, until we get there, who knows? Cars are just money suckers. They are. An expensive hobby. They are. My buddy Brian, he works on cars, but he, he buys them and fixes them up and makes them look good again and sells them or whatever. I have booze and cigarettes problem. Any tips? I have a booze and cigarette problems. Any tips? I really need to stop. I'm broke guy with plenty of booze and cigarettes. Are you serious, guy? It kind of sounds, I mean, when you're ready, if you're serious about it, email me. I'll tell you what to do. Stick with the Toyota. Yeah. Which U.S. state you live in? I live in Oregon. And that is, well, I don't know if you could see it, but that's Washington over there. It's the Columbia River in between. What are some tips to ordering a framing package for my own personal cottage build? Tips to ordering a framing package. Framing packages are pretty easy. If you have your list of materials, go around to as many lumber yards as you can. If you already have your list, like, exactly, I need, 128, interior 2x4 studs. I need, 200 exterior 2x6 studs. Got my plating. You got all the stuff. Like, you got it lined up. You know exactly what each one of them is. Don't take a bid from one lumber yard, like take the bid from one lumber yard to another one, right? Just say, hey, here, I got this lumber package. Can I get a bid on it, right? And just either have it printed out for them or whatever, but don't give them like the numbers from another lumber yard, right? Because they will guarantee to be just a little bit under each one of those marks, right? And so if you really want to get the best deal, just have them bid it out for the best that they can, the best price first or whatever, right? So just have them bid it out that way. But check multiple lumber yards because, depending on the position that they are in when they made their lumber purchase, may have plywood cheaper at one location as opposed to another. Most of the time when you're doing full-on lumber packages, they're not going to allow you to break that lumber package up. Some of them will, but most of the time, like, if you have like one person has a better price on plywood, but the other one has a better price on random lengths, and you're like, well, I'll take the plywood. Well, no, it was a bid for the entire project, right? For all the material. So a lot of times you won't be able to just pull like a piece of that, of the better price out of each one of these bids. You'd have to go with one of the bids. Although I've seen people get away with it. That's happened in the past where you can actually attempt to do that. What you'll end up doing is usually discouraging your lumber supplier, your building supplier, from doing anything beneficial for you ever again, right? If you treat them that way. If you're like, haha, I got one on, you got that plywood for cheap, didn't I? You forget about like quick deliveries. You can forget about like, getting like all that other stuff because you don't make it profitable for them, right? You just actually screwed them out of a profitable deal. So why should they step up for you, right? I mean, and this is like, it's just that's just a business deal, right? So, but if you're cool with them, they're going to be cool with you. And so, one of the things is building up a decent rapport, right? Building up a decent relationship with your lumber supplier. And when you do that, it's just like it is okay to like, try and haggle on stuff. I mean, that's like, part of the game, right? But you don't try and like, screw them. Like just try and, say, hey, I, got you good on that one or something like that. This isn't a game like that, right? This is a game where everybody tries to be, successful at what we're doing. We want to be successful. We want you to be successful. Everybody wants to be successful at what they do. So again, getting the best lumber prices, having that list of materials ready to bid out, right? Not bringing, like if you have maybe it's a lumber takeoff that you need from like a set of blueprints, in that case, generally most lumber yards have somebody who will do takeoffs for you, but having that list of materials ready so they don't have to screw around with trying to figure out what it is that you really need, but what you need, is going to make that process for the lumber yard so much easier and faster for them. Being aware of the products that you want, like say for a particular house wrap that you want, like a vapor barrier or something, be very specific on that. Like, I want these particular things. Do you have access to those? Those are some of the questions that you can ask to make sure that you are getting the products that you truly want, so that, like, well, I don't want that, I want this, go figure it out, go find it, or something like that. In the middle of a project, trying to figure something like that out is very difficult. So being like ahead of the game, like, hey, can you get these products before you attempt to actually get them, just to be curious if they are available to that particular yard. That can definitely alleviate some stuff. Picking up as much of your own material as you can is going to alleviate a whole lot of headaches, right? And then when you do ask for deliveries without a time constraint to you, right? Because like you're like, man, I got a crew here and that stuff still isn't here, and we're not and I'm paying these guys, and your frustration and aggravation is getting really up there. Why don't you have the material delivered last week, or maybe a couple of days ago? Or tell your crew that until the material gets there, we're not going on to the job site. Trying to time it so that you're paying people to be there when the material shows up is not a good idea. Like, just straight up not a good idea at all, right? So these are just some of the tips. I mean, there's all kinds of little things. The biggest one is building the rapport up with the lumber yard. Go down there and know everybody's name. If you learn everybody's name, the salesman's name, the yard guy's name, the driver's name, you learn everybody's name, learn a little bit of something about them, they're gonna start pulling it off for you, right? I mean, they'd be like, oh shit, man, I forgot I got the concrete crew coming, and whatever, I got a concrete truck coming, and I need, a couple of more form boards or something. Is there any way you can get it to me? They might drop everything they're doing and run those things out to you because you're such a good customer to them, and you're such a nice guy, and you treat them with respect, and they treat you with respect, and everybody's cool. That's the kind of thing that might end up happening for you if you have that decent rapport. But I've had people who are just constantly trying to get the edge on me, trying to get the best deal, trying to get the, work it over. It's just like a constant hard sale every single time, and they wonder why they have to wait a week to get their delivery or something like that. Is because you're going to change your order, because you do it every time. So we're going to set your order up for next week because we don't want to pull it and then have to re-pull it and then pull it again before we deliver it to you, right? I mean, this is the type of thing. I've had people tell me, geez, I'm really going off on this. You know, I've had a guy before ordering windows. He would order a window or a window package, and then 3 days later change it. And I'm like, what are you doing? And he kept thinking that he was putting himself in place. Like, I have this window order in place and I can adjust this window order. I finally had to tell him, no, you understand what's happening here is I have to cancel your original order and then you go back to the end of the line and we have to reestablish your new order. And he was like, oh, and I said, that's why your windows are taking so long is because you keep doing this to me. And he was like, it finally dawned on him. See, this is the type of stuff. He didn't understand what was happening, and so he kept screwing, like he was like screwing me up, right? You know, because he would put these orders in, but didn't have the appropriate sizes or anything. And then I would have to cancel the entire thing. And then he would be frustrated when his window package wouldn't show up because he was trying to get a jump on the game, but he was actually screwing himself out of it. So, anyway, all kinds of ways to get better. I should do a video. I should do a channel just on how to buy building supplies, you know. All right, China on deflationary trend. Yeah, and it's going to get way worse over there too. Just watch China. With the things that are happening in China is going to happen around the rest of the world. Not the same way, not exactly, but it's very similar, you know. They they think about it. They got COVID first, locked down first, opened up first, stimulated first, went back into restrictions, COVID lockdowns, all the whole mess. Like everything happened in China first, you know. All right. Have you ever noticed that the overall crypto market goes up and down almost exactly like the QE and QT programs? It started in 2008, just like crypto too. Yeah. Okay. CSX reported earnings after the close today, and shares are down. Then trucking company also reported shares selling off also. It's a bad deal. Like the trucking company, the whole trucking situation across the country, you can see it happening. Like just take it back for just a minute and think about like what some people were saying when lumber ran up. Like lumber's running up to $1,700 per thousand, right? They're looking at 2x4s selling for $10, $12, $13 a piece. And they go out and they start buying mills, like portable mills. These things were really ramping up, and people were coming to me. It's like, hey, I'm going to get a mill. How do I make money off of this lumber? And I'm like, I don't know, man. I don't know how you're going to make money off of that lumber because you can't really sell that lumber for framing, like framing a house. It has to be, inspected by, it has to be graded and inspected. It has to meet the qualifications for building a house. And then, like, how are you going to distribute that to people? And how are you going to make it consistent so that they're going to actually use it? Like, I don't understand how it is that you're going to use this mill to make a bunch of money out of the blue. Like, all of a sudden, because lumber prices went up. Like, I understand that wood is expensive and you have the availability to cut wood, and somehow you should be able to join those two together. But unless you are already in the game milling up lumber when those prices ran up, there's no chance. Right? You should have been in the game before that happened in order to take advantage of it. But now with the prices as high as they are, you can take out a lot of investment and put it towards buying a mill with the projections that these prices are going to stay elevated forever. And then when the prices fall, you're out of business. Same thing with the trucking. Same thing with a lot of stuff out there. You can use that same scenario for a lot of stuff, a lot of things out there, right? I mean, I'm not really into, the computer chips or whatever, the semiconductors, but I would imagine something very similar inside of the situation happened with that as well. And so when it came to like, when it comes to just about anything out there, when you look at the distribution network and you think about like when the prices go up, the investment that goes into it, what ends up coming from that investment? And overproduction, right? Same thing with like eggs. Everybody was all lit up about eggs. I'm like, don't stress it. It's at $7, $8. They're going to have, here in 6 months, there are going to be more hens producing more eggs than anybody could ever possibly imagine, because they see the investment going into, egg production, because you got these high-priced eggs. It's going to produce so much eggs, they're going to be like back to their, probably practically free at some point, in a lot of areas. And I heard that they got really cheap there for a while. But again, it doesn't matter what it is. If the price goes up, you're going to see a massive amounts of investment go into it, and then when the prices fall, you're going to see bankruptcies come from that because of that investment that went into it. It's malinvestment taking place. All right. Just stop. You don't need an excuse. Be prepared and do it safely. Okay, how many years, months out would you guess we are away from stimulus? Because that's going to be in the form of Fed now. I don't know. A long time. I mean, who knows? Like, the Fed's practically got their ammo back, right? I mean, they're at 5.5. The longer they leave it at 5.5 or even increase it from here, they can drop interest rates 5% now, right? Now, how far past the neutral rate? I don't know how far they'll get that way. But the perception, the people, they will look at a 5% drop on the Fed funds rate and be like, woohoo, in the money. Like, let's go out there and start buying houses and cars. Let me know what you think. What are we? Check out my short on inflation. What is this? Beaky powder? Beaky, what does it say? Beaky Parker. Golly. All right. How many years, months? We already did that one. Okay. Seems easy, huh? Let me know what you think. Okay. Daily Driver SS Supercharged 2.0 liter. Fun to tool on. Right on. Yeah, and see, that's the thing. I mean, if it's your hobby, if it's your fun, your passion, or something like that, that's a different thing. Like, that's completely different. But, you know, just for transportation, like to get from point A to point B, I I just can't do it. Like, I mean, I really want to. Like, I would love to drive a new car around, a new truck or whatever, right? But the money that goes into it, it's like heartbreak. I can't bring myself to do it. I'd rather just drive this old 99 Toyota Corolla, you know? All right. Do you buy gold and silver? Absolutely, I buy gold and silver. Everybody should. At least some, right? Use it as an insurance policy. All right. I have done that too. Still waste my money. It's tough. All right. What would you say are the top tools a first-time home buyer need to work on his house? If you want to, there's probably 3 tools that would be the most significant tools that you will use more than just about anything. And if you can learn to use these 3 tools, you can really, I mean, there's other things that'll make it a whole lot easier, especially like getting into finish work. If you're doing like the trim work and finish, then a chop saw would definitely be something that would be needed. But if you don't get a chop saw, circular saw, right? 7 1/4 circular saw. I recommend the worm drive saws, like, you know, the Skill worm drives, just because from framing production, they were the easiest ones for me to use. So a worm drive saw, they cost $200, $250, depending on which ones you get. Cordless drill impact driver combo, like a drill motor and an impact driver. These are 2 different types of screwing devices, like one for drilling holes and the other one for putting screws in. The impact driver is probably the best tool you could ever have for driving screws, especially if you're putting like deck boards down or whatever. You will never go back to a regular drill after you've used an impact driver. So the skill saw, you know, circular saw, impact driver, drill combo, cordless, and then Sawzall, right? Reciprocating saws, right? And those 3 tools, if you are a homeowner looking to do remodels or whatever, those are probably going to be the most significant tools that you will use. And then after that, a table saw and a chop saw will, as far as power tools go, with those, you're going to pretty much have what you need in order to do the majority of everything that you have on your house. You're going to need a lot of like little tiny, you know, simpler tools, chisels and, you know, hand saws and, you know, other little things like that. But as far as the significant power tools, skill saw, drill driver combo, reciprocating saw, chop saw, table saw. All right, I will email, sir. All right, guy. Yeah, if you know, if you're really serious about it, man, I will answer your email and I will give you my opinion, man. What would you say are the top tools? Oh, we already did that one. Okay. Because, you know, this is a very, I mean, alcohol, drugs, all that stuff, that's a very sensitive topic for me. I mean, I went through, you know, we experienced a lot. My wife and I, we we were pretty heavy alcoholics there for a long time. And, the way we got out of drinking or quit drinking, it was tough. We went, we did different paths for quitting, my wife and I. She went the rehabilitation, AA, did all that other stuff. I got very angry and just quit cold turkey and had to deal with a lot of issues because of that. I really recommend doing the AA, doing the institutional stuff, because the amount of issues that come up mentally after you quit drinking that you have been covering up because you've been drinking really start to play out. And so unless you're willing to go and get a lot of therapy or something like that, going to AA, going to the meetings and listening to other people tell their stories is going to be probably one of the most helpful things that you could ever do. And then yeah, like that's, it's one day at a time. And it's like, I think probably one of the biggest misunderstandings that a lot of people have when they go to quit is that they feel like, they get like a couple of days into it, like, a day, 2 week, whatever, 2 weeks into it, and they feel really, really, really good. Like, you feel awesome because you've done it. Like you're not doing, the drugs or the drinking or something, and you're feeling really good about yourself or whatever. But it's kind of like a false high, right? It's just, you're just kind of experiencing something new that you're feeling really excited about. What ends up really happening is that you then start getting some clarity onto how bad you really are, right? And how bad your life really is. And then you get very depressed over that. And that gets very difficult to deal with, right? So this is really where, like, again, going to the AA classes, or at least doing some sort of therapy, right? If you're not going to go to AA classes, because sitting around trying to figure out why it is that you are feeling the way you are after you have given up drinking is very, very hard, right? It's very difficult to try and get through that shit. So, that's my advice on it. There's a lot. We could talk all day long about this stuff because, there's a lot to talk about. I had to go to liquidate some silver 60 days ago. Needed a trip to the USA. Thanks. One lumber yard was almost $3 difference on a 2x6 Alright. How's that a waste? Metals hold their value. I meant still waste my money on booze and cigarettes. Fuzzy Dice back. Oh, the insanity. Hey, Lord Humongous. Good to see you up in here, man. All right. Whole value relative to fiat currency plus required for our conveniences. I smoke 3 packs a day. It's a hardcore problem, which makes it even worse compared to quitting. Worse compared to quitting if I only smoked 5 cigs a day. Damn, guy. The local lumberyard does not stock 2x12s. Is this normal? Maybe for a smaller lumberyard. 2x12s used to be the very, very, very common floor joists. Like, everybody used 2x12s for floor joists. And since, like, I don't know, probably the last 30 years or more, definitely over the last 25 30 years, I-joists, engineered floor I-joists and stuff like that have become so much more popular. They're a much more consistent, better flooring system than, saying, using 2x12s. So almost all lumber yards order in the flooring systems, meaning like you get a package for the floor. Like, okay, for those who don't understand a flooring system, when you're framing up a wall, right, or framing a house, you frame the walls up, and then you get, for the second story, you have to put out the floor joist, right? So the floor joist package, the I-joist, is all these pre-cut I-joists that pretty much, you have to trim them up, but usually for the most part, they go right into place. And so you put all these I-joists in, there's a header systems, for above doors and rim joists and all kinds of stuff that goes with it. But it creates this flooring system that is really solid. It's really good and very sturdy and consistent. 2x12s, there's a lot more chances for, say, say crowned boards or warping boards, or having issues with just not being as consistent, right? So 2x12s are not nearly as popular for doing floor systems as, say, the I-joists are. So if your lumberyard's a fairly small lumberyard where it doesn't have a lot of turnover of, like, all the material, then it would make a lot of sense that they may not even stock 2x12s and just special order them in as they need them. Like they may have a supplier that will, you know, sell them broken units, which means that they will take just a handful of pieces out of a unit and sell it to you. That's another thing that a lot of lumber yards or people don't realize when it comes to a lumber yard is that they may have access to a lot of material, but a lot of times they're forced to buy an entire unit of it. So you come up with like this really fancy decking that you saw on the internet. You're like, man, I really want this stuff. And then you go to the lumber yard and they're like, yeah, I can get it, but you have to buy, you know, 160 pieces. And you're like, oh, I only want 60 pieces, right? How do you get it? Right? So now you got to find somebody who's willing to stock it, you know, or, you know, has it in stock or, you know, whatever. But then you're like, you're limited. You're like, I just can't get it. So that kind of thing happens all the time. So that's another reason why, you know, I was saying, you know, go to your lumber yard to make sure that they can access the material that you're looking for. All right, ahead of the curve, not the game. Game is rigged. Me as well. Beer, little cigarettes, etc. Yeah. I think gold and silver are obsolete. Well, they're not though. I mean, you have to think like, what is it obsolete of? Is it obsolete as a world reserve currency? Maybe. I mean, I think that it could still be used as a world reserve currency. In fact, it would be more likely to be gold and silver than just about anything else out there because it's recognizable. It's, you know, already in the central bank's, you know, coffers, so to speak. It's like, you know, it's just right in line to just, you know, if the dollar was to fail, gold would be it. Like, I don't think that anything else but gold could replace the dollar as far as a world reserve currency. So it doesn't have that kind of obsolete to it. It does have, you know, a lot of versatility as far as an industrial use, you know, and then on top of it all, like, there's really nothing else out there that is a real value. Like, money is real, like gold is money, everything else is debt, like a promise to pay. So no, gold and silver definitely are not obsolete. They just have a different purpose from what they once did and what you want that purpose to be, you know. All right, I quit cigs for an hour. I started sweating bullets. If I quit cigs for an hour. So, you know, the hardest part of that game, guys, of quitting is making the decision that you're going to do it, right? It's finally, you know, it's probably going to take a traumatic event in most people's lives, like, you know, have like some kind of major health issue that comes up, or maybe a relative dies from the same issue that you are now facing or something like that. Maybe, you know, family, or, you know, the partner leaves you or something like that, you know, you lost a relationship because of it. Something traumatic is usually going to end up being triggered for you. Like, very rarely is life going really good where you're addicted to drugs and alcohol or whatever, and you're going to be like, man, I think I'm just going to give this up for the benefit of my own self, right? I mean, it happens, but very rarely. Usually it's a traumatic event, right? You're absolutely broken to get kicked out of your house, then you finally, you know, woman's going to leave you or divorce, or, you know, kids won't talk to you or something like that. You know, this is the type of thing that it really takes. And until you know, and I guess unless you're willing to sit around and wait for something like that to happen, you have to think about what it is that it's doing to you and consider that the traumatic event, right? Because otherwise, what are you going to use, right? What is your motivation behind it? I think the moon is made of green cheese. Wouldn't that be nice? All right, look for the quality of wood if you are looking for cheap wood. It is not always best. We did a job and every 2x4 was junk. Cost us 3 times what we should have paid with labor and time. Yeah, and that's another thing. Like, you know, my lumberyard carries a premium pressure treated. Like, we don't even, there's 2 grades. You can carry the professional grade or you carry the premium grade. The premium grade pressure treated has less wane, which, if you're not familiar with wane, bark wane is where it's like the very edge of the tree is like, you can see the board, and on the very edge of the board, the corner of the board, you can see like the edge of the tree. It has like almost like this live edge going on. That's bark wane, or wane board, right? Or a waned out board. And like all our pressure treated that we carry is a premium grade, so it has very, very rare do you see that on there, and very few edge knots. So it's been selected out to be a higher grade treated wood. Well, that's what we had to do because there's no way we're going to compete with the guys down the road, the big box store. They have the cheapest stuff and it's garbage and it's crap and people know it, and so they come to our yard and we sell it all day long because we got beautiful looking pressure treated lumber. So when they're doing their exterior projects, you're building your decks, your fences, you know, all the gazebos, all these things that you want to build outside. You don't want them to be made out of crappy lumber. I mean, everybody's going to be looking at it. You want it to be made out of nice lumber, and that's where we carry a higher premium grade, and we sell so much more of it. You know, I don't know about more of it, but we sell a lot. You know, and everybody says it too. They're like, "Man, dude, your lumber's so much better than down there." You know. All right, I don't think are obsolete. Civilizations will always use gold and silver for its conductivity ability already. Yeah. Are there lots of small lumber yards in the U.S., or are there small amounts of large yards? There used to be a lot of small timber yards in Australia, all gone. Same with hardware stores. Yeah, they are disappearing fast, very fast. They are getting consolidated. The yard that I work for is the oldest lumber yard in Oregon. It's like one of the oldest lumber yards on this side of the Mississippi, if I remember right. I think California has an older one than we do. Than we are, but we've been in existence since 1904, right? So it's a very old lumber yard, and it's a single yard owned by a family, no corporation involved, whatever, right? Now, this town, when I started at the lumber yard that I worked at, which was a small corporation, there was 3 lumber yards in town, right? Now there's only 1. When I started, again, when there was 3 lumber yards in town, there was 3 in town, and then 1, 2, 3, 4, 7 lumber yards in the county, right? So 3 lumber yards in the town, 7 lumber yards in the county. This is when I started in 1995. Today, there's 1 lumber yard in Astoria in town, and there's 3 lumber yards in the entire county. And 2 of those are major corporations, right? So, yeah, and there was smaller single like, mom and pop type lumber yards. There was a few of those prior to when I first started in 95, but they're all gone now. And we're the last, we're the last one. All right. Have you tried to buy a car lately? Like a new car? No. No. My wife bought a car a few years back, but no. I don't even I hardly I guess I do look at the lots just to see what's there, what the price are, but I don't really look at when I drive by the car lots, I don't look like, oh man, I wonder that would be a nice car. I don't fantasize like that over cars. UE, do you know what would happen to industrial consumable metals during a recession? Copper, aluminum, steel? Well, copper is a really great indicator of construction industrial demand for pretty much anything out there. You look at copper and you look at lumber, and you can really see what manufacturing and demand for industrial type stuff is going on. Those 2 particular components. However, I look at copper as something that's trees are different. Trees you can grow, you can farm them up and stuff, but copper is a limited supply, it's finite, right? So even though we see maybe copper and steel and all these other prices come down during the recessions, I think at some point copper is really going to get hit hard, where there's going to be a huge demand for it, and the availability of it is going to become very, very tight, right? And I don't know how far into the future that's going to be, but it just seems with the huge demand moving into electric vehicles and EV everything and cordless everything, the demand for copper, I could only assume, is going to be much more significant than what we had experienced in the past when we had slowdowns. All right. So nice to join the chat. Well, it's great to have you here, Freedom Works. All right. Those barbarous relics are so obsolete that every central bank is hoarding it. It's hoarding it. Yeah, that's true. Every central bank is getting into it too. All right. I pay cash roll cars, not making payments at that. Yeah, I agree, man. I just can't. I can't do it, man. Not like maybe someday if I had a whole lot more money, then I would be interested in driving a new car around. But I just don't. I just don't see it. Yeah. All right. Is it smart to just buy a shipping container to store lumber in and then buy when the price dips and build with most of the materials in the container with a few time constraints? Yeah, if you can do that, absolutely. You know, you can. Okay, reconnecting. Okay, that's actually a really good way of getting really cheap material. Is that if you don't have to buy the material to build the house, like if you're not set on a time constraint, right? Like you're saying, and you have a shipping container in which you can load up material, you can go around to the lumber yards all over the place. It doesn't have to be in your local area. Just go around and ask about boneyard windows. See if you can buy like old misorders or maybe something that's, like, I don't know, just kind of a weird shape or something like that that you just don't, like, most people just don't even want or whatever. Usually it's a misorder of some sort or a mistake, or just failed to make it to the customer, like they just never come picked it up. A lot of times you can get those materials really cheap. Like, they'll be like, a lot of lumber yards are just like, man, that's it. I'm just tired of having this stuff sit around. Get it out of here for cheap. And you can get like, $250 windows for like $50 at times. So that's another good way is just go around and just find cheap material and if you can and store it away till the day that you're ready to use it. All nuclear power generation plants are being brought back to life if met criteria electric economy. Yeah, I was reading over in like, what was it, Germany or something like that? They got so much green energy production that rates actually go negative. They encourage people to use power during certain times of the day, and they're paying them to do it, right? Because it's so much energy being produced with this green movement or all this green energy production. China is arresting debtors right now. Yeah, that doesn't surprise me. All right. Deep thought. Wow. Oh, when it comes to the alcohol, yeah, probably what you're probably talking about when I was talking about the alcohol and stuff like that, dude. It's a touchy subject, man. I will, you know, it was a road, bro. It was a tough one. How to buy building supplies? Find a small U.S. contractor that has a trusted source in China. The end. Most building materials are sourced out of the United States. It's all the fixtures and the amenities and stuff, but the actual construction of the house, like the framing lumber, the siding, the doors, windows, all that stuff, most of that stuff is domestic. Totalitarian communism for fun for the whole family. Sitting at a bar in Rancho Cucamonga. Is that how I say it? Cucamonga? uh, Deep thoughts. The SLN. Yeah. Sounds like someone is asking about the Raoul Paul is talking about. My sister's ex-husband had some nice timber. He made bespoke furniture and mirror frames. More of a potato chip than a computer chip. John, thank you so much for the $4.99, man. Really appreciate that. Doesn't it feel like the longer the markets go up, the harder the longer the fall? The harder and longer the fall will be. Yeah, I don't know. Like, I think according to John Williams and what he was saying about allowing the inflation to run extra hot, extra long for an extended period of time to make up, right? To say, like the 2%, it seems to me like they are pushing the idea of getting asset prices to be extremely elevated so that when we do go into this downturn and the asset prices come down, they fall to what would have been a normalish price. I think that's kind of the idea behind it. So, I mean, it feels more like, the bigger it is, the harder it'll fall. Very much, in line with that, like, that seems very reasonable, that line of thinking of it. But when I think about what the Federal Reserve was intending, or at least from their words here, not that they're able to, you know, make it happen, but, you know, from that idea is that they were going to get the assets elevated for a significant amount of time, so when they do come down, they kind of come down to where they hit the mean, you know, or whatever. Okay, there are surplus of pistachios in Australia, but the supermarkets don't reduce the price. But now is effing scary. Okay, well, it's only the meaning that you're giving it, right? I mean, if the Fed now is scary for you, okay, and this is the thing, it's gonna hit you. This is why I don't stress about this kind of stuff, right? I mean, I put a Fed Now video out 2 years ago. Like, I was one of the few people that actually was talking about the Fed Now when they first actually stated that they were going to do this. You know, and I thought it was a preliminary to central bank digital currencies. The only thing about it is that it's all about the meaning you give it. If you're like, man, the Fed Now is going to control our lives, it's going to keep you from being able to, you know, buy the things that you truly like, all this stuff, like all these horrible things, right? And this is the thought that you give it. This is an emotional hit. Bang, right? Now you have this belief. Here you're going to go find the evidence, and it's going to confirm it, right? So now you have this confirmation of this fear of this Fed thing, Fed Now, this new process of payments, right, that is going to direct you in everything that you do and your subconscious behaviors in line with how this is going to destroy your life. And that's exactly what it'll do, right? It's because basically you create the fear that you're, you know, create your reality out of the fear that you're experiencing. And that'll happen, right? I mean, it happens to a lot of people. We talked about this the other day, like the confirmation bias. I called it the jealous boyfriend effect, right? Where, like, you know, a jealous boyfriend hears from his buddy that his girlfriend's like doing things that maybe he wouldn't be approving of. Well, he accuses her of it, she denies it, but now he can't help but to look for evidence of it. He's going through her phone, he's, you know, following her around where she, you know, trying to check up where she's been, not believing all the things that she is saying, right? And then next thing you know, she's like, starts behaving in ways that feels that way, like, you know, she's not telling him where she's going, and she's trying, you know, she's keeping the communication secret and stuff like that, and creates this whole environment right off the, you know, right out of it, when it never really existed in the first place, right? It's the story that we tell ourselves, very much like the story that I tell about the Fed funds and, you know, or the, you know, creation of the special purpose vehicles and stuff. If I don't tell this story, who will? Right? I mean, not the story that I saw anyway. And all kinds of other people, they have their story that they talk about the economy and how it was all the money printing that did it, and they got all their reasonings for it, very much like I got all my reasonings that it had a lot to do, or a big time to do, with the supply chain breakdown. And I find all kinds of evidence that proves it that way. Yet there may be plenty of people out there who don't even look at the supply chain, don't have one bit of information about it, and have come up to all kinds of logical conclusions on all the experience of inflation had everything to do with the Federal Reserve, and period, 100%, no other information needed, right? And I mean, there are people out there who are very much like that and conducting their lives with that thought and energy and effort and everything going into it. You know, who knows what that's going to end up leading them to? They might be total success. How would I know, right? Yeah, I don't think that way, you know. But yet that's the, you know, everybody tells their own story. All right, left blower if you live in New England. If you live in New England, leaf blower. We don't need screwing devices. Our government loves us. Government. I love Lord Humongous, man. He's just like, all right. Government found out about the impact driver. All right. No lube. Okay. Maybe not enough competition. Why do you think the real estate companies are paying top dollar from finance professionals? I don't know. I would have to read up on that. I'm not sure what. I would have to, I don't know. I have to read up on that one and see what you're getting at. All right. I'm in Thailand at the moment. There are weed shops everywhere. Really? They sell weed in Thailand? I'm about to go to sleep. How is there light in America? Yeah, well, I'm out here on the West Coast, so it'll be light out here probably for another, I don't know, what is it, about 6 o'clock or so? 6:30? Probably be light for another 3 hours or so, till about 9:30, 10 o'clock. Some get more addicted than others. You know. Is food an addiction? People can be addicted to food. You bet. Pink clouding. That's exactly right. That's when that pink cloud is that super happy moment, like you felt like you won the lottery just after you know, like a lot of people feel it in all kinds of ways, like whether it's a new job or you've found a new place to live or you know, new girlfriend or something like that, you know, but they're quitting of drinking. Like you give up this drink and 2 weeks later or so, like you just feel so awesome, right? But that's a pink cloud. It's like, you know, you're floating on this thing that's it's not real. It's gonna end. Freedom works. Thank you so much for the $1.99. Therapy for the win. Doing it by yourself ain't working. Yeah, and see now that was my major issue is that I don't do well in therapy because I'm argumentative, right? I mean, I like to debate. I like to, I just get argumentative and I don't do well in therapy. Like I've never talked to a therapist who like I had a couple of therapists like get frustrated and get up in their seats and like slam them down, It's just like I come pissed. Like they're not supposed to act that way, And I don't know why I do that, right? I mean, it was just something within me. But for me, I couldn't do it that way. I couldn't sit down and talk to somebody about things. The only person I could really talk to was my wife, right? And she was going through a lot of issues herself. So she's trying to figure things out. And it's just like, how do you, like, you can't, properly, help somebody out if you're having issues yourself, right? So that was my major issue is that it took me forever to try and figure things out. I would be up at 3 to 6 o'clock in the morning reading Psychology Today articles, right? 3 hours straight reading these things, trying to figure out what was going on in my head, trying to figure out all this stuff, like why I was feeling the way I was feeling and emotionals and all the other stuff that goes with it, right? Most people don't realize, you start drinking when you're in your early 20s and you drink your entire life, like you don't realize how much stuff you cover up. Like straight up, and then all of a sudden now here's exposed, you have to deal with it, and you're like, man, I almost want to go back to drinking, but then you deal with it and you feel better and whatever. All right, keep up the great work you're doing. Thank you very much, Freedom Works. I wish people were addicted to freedom. Me too, bro. Lordy Mungus, you never said anything that I would agree with more, man. I wish more people would be addicted to freedom too. Do you think commercial real estate will cause banks to default and crash the markets? I don't think the banks will default or crash. I do think that there's going to be a commercial real estate issue. But I don't think it's going to cause... The main reason why is because you can think of it, right? I mean, and I know a lot of people might be like, oh, God, bro. No, but it's the truth, right? If you can come up with a scenario in which that you feel that this is going to happen and this is going to happen and it's going to cause this huge banking crisis to take place, the Federal Reserve has thought of that, right? I mean, if I can think of it, the Uneducated Economist can think of it. One of the 150 top economists at the Federal Reserve has probably thought of it too, right? And now, one of the things that I have definitely learned from the Federal Reserve is that they have all kinds of tools in the toolbox that we just don't know about. Right? The Bank Term Funding Program, I think, was probably pretty good evidence of that. When people said to me a long time ago, they asked me, do you feel safe keeping your money in the bank? Yes, I do. Should I be? Should I be worried about it? Probably should be worried. Is it the safest place to keep it? No. Is there such thing as bank failures? Absolutely. But I felt the Federal Reserve and the Treasury were going to have lifeboats ready to deal with the banking crisis that comes, because there's almost guaranteed there's going to be a banking crisis. Like, there's very little doubt in my mind that there's going to be bank failures, right? Now, whether or not you've got a full-on systemic banking crisis taking place, or you have a bank-in crisis, right? The bank-in crisis, whether it be just one or two or many of them, I think the Federal Reserve and the Treasury and all these people have tools and the system set up to deal with a systemic problem of such natures. Right? And I think, again, the Bank Term Funding Program was quite evidence of the, of this type of thing happening, So I don't see anything, like, I don't see something in the markets dragging down the entire financial system, right? There was a time when I did see that, right? Especially right after the great financial crisis and the toxic mortgage-backed securities that were dragging down the entire financial market. That right there, that little situation put so many changes into the way the Federal Reserve handles the financial system that, like, shocking events like that, I just don't see them happening like they once would have, right? Not saying that they can't happen. I mean, there's very well that it could, but again, Bank Term Funding Program, I think, was evident of, like, the fact that they have tools hidden back there that we just don't know about, that they're ready to deploy right now. It'd be like, of course, right? How do we escape this realm? You start with meditations. Okay? You start with meditation. That's in observing your thoughts. That's the key to pretty much everything in the entire world, is just observing your thought, right? The thoughts that you have. And I know a lot of people will be like shaking their heads at that. It's very difficult to try to, like, coach this thing and like how I do it anyway inside of a single video. It's something that you have to learn over time. But really, it's like, the best way is when you get triggered by something. Somebody cuts you off. Boom, like, you're cut off in your car, and all of a sudden you're lit up and you're pissed and you're banging, you're hitting the steering wheel and you're throwing stuff around in your car, and you're pissed off and you're like, that dude, how dare he do that to me, right? And so you think about that for a second. It was just like, are you really mad at that guy for cutting you off? Or are you just mad about the way being cut off made you feel? Because that's really bad. You don't really care about that dude. That dude's a neutral. He doesn't mean anything to you, right? I mean, it's just some dude out there who probably doesn't know where he was going and was trying to get into the right lane so he could take an exit or something like that. He wasn't trying to piss you off. You just got pissed off by his actions, right? So that was a neutral event. Why are you so mad? Like, what is it that's going on right now that has you so lit up that you got that mad at that dude? It's not that dude. It's something else that's going on. Think about it for a minute. Why? All right? That's where it starts coming. That's where the key to it, right, is to figure out why it is you felt that way. Because what most people don't do is try to figure that out. And instead, they're just like, oh, screw that dude. Where's my beer? All right? Give me a beer. I need a beer. Easy enough. That guy's gone, right? Every crack of the beer, everything, all the problems go away, right? Well, that's the problem, right? Observing your thoughts. Aren't we supposed to be talking economics? What time is it? 2:16. How long do you guys want to hang out for? Should we do another 3.5 hours? I couldn't believe I did that the other night. 3.5 hours I did a live stream. It was crazy. All right, for quitting smoking, get a vape and then get a juice with high nicotine. I slowly winded down on a vape and haven't touched a cig in over 7 years. Well, I mean, that's an interesting way of going about it. I can never taper off. I had to just quit. When do you see central banks' digital currency fully implemented? After a major crisis. See, the major problem with central bank digital currencies is that, I mean, at least from my perspective of it, maybe I'm wrong on this, but it seems to me that the central bank digital currencies is pretty much going to have every single person with an account at the Federal Reserve, right? And the Federal Reserve would have direct money injections into our wallets. That right there is against their charter. They can't do that, right? And so there has to be a change to the way that the monetary system is done, right? I mean, it literally has to take a change of Congress in order to make this happen. Now, the way that the Federal Reserve injects money into the system is that they don't buy treasuries directly from the Treasury. They buy it through the primary dealers. Because if the Federal Reserve was to go directly to the Treasury and buy the treasuries from them, now I know a lot of people might argue about this one, whether or not they're doing it. It doesn't matter. They're not supposed to, right? The idea behind it is that they have to go to the primary dealers. They cannot go directly to the Treasury, because if the Federal Reserve was to buy treasuries directly, buy the bonds directly from the Treasury, that would be monetizing the debt, right? But because what they are doing is buying it from the primary dealers, they are purchasing something that has already been purchased, right? So they're not monetizing the debt. They're buying something from these banks who have already purchased it from the Treasury. So that's not directly monetizing the debt. Now, my argument to that is that if you are one of the primary dealers and you got the Federal Reserve promising that they are going to be buying treasuries from you, you can buy as many treasuries as you want from the Treasury because you know that you're going to be able to sell them to the Fed, right? So you're just pretty much just acting as a middleman, still monetizing the debt, right? So anyway, the central bank digital currencies, in order to have those implemented, is that you have to be able to have a system in which that the Federal Reserve could basically monetize the debt. And now the way they would do that is what I assume is by something like, have like an emergency treasury bond, right, so to speak, that if there was ever a crisis, like say, gross domestic product fell below a certain percentage, right? These automatic treasury bonds will already be there, right? They're already for sale. And because it's an unusual and exigent circumstance, the Federal Reserve could then buy those bonds and direct the money right into the central bank's, digital currency wallets. I don't know how that system would get set up, right? I mean, that's how I kind of see it going down, because you would have to have some sort of way of getting out of the monetizing of the debt directly from the Fed purchasing treasuries, right? Going through the primary dealers. That money going to the primary dealers would then have to be distributed out to the rest of the people. So again, like the central bank digital currencies are wallets coming right from the Fed, to the individual, and that little process right there, you got to get around that, somehow. I don't know. So it's not going to be easy. How do they do that? Crisis situation will cause it to happen right now, because the people will go to the Congress and say, if you don't do this, you are causing me pain and suffering, and we're going to vote you out, right? So give us our central bank digital currency. And the Congress will be like, here you go. No problem. All right. You're a legend, sir. Thanks, man. I try. I want to come out here and I want to talk economics. I want us all to learn it for the best that we can, and, make the best decisions for ourselves. I appreciate it, man. A pure carnivore diet is a good trick to get off addiction. Broil a steak at 5 a.m. each day for a month. Huh. Interesting. After steak, all I want is smoke and maybe a malted milkshake. Then a nap. Oh, milkshake sounds good. Anyone have experience growing, curing tobacco? Thanks. Fed won't let anything crash ever. Been using gold and silver for 5,000 years. Why would all of a sudden it switch now? Technology disrupts all. Yeah, very true. It's the beginning of the digital era. I need to continue smoking because it is the only way to keep the psoriasis in check. Huh. My old boss was trying to encourage people to quit smoking years ago and told us how he was such a heavy smoker that he used to smoke in the shower. Wow. Yeah, that's a pretty heavy smoker. Steak at 5 a.m. is not going to a sleep. Gold and silver would be destroyed if you could create them cheaply or create them cheaply or free. BTC could be destroyed with quantum computers. Yeah, but I mean those are big what ifs, I mean, you can't create gold and silver cheaply, and even still, BTC, I mean, it hasn't been destroyed yet. I mean, that's all possibilities. It's not necessarily. All right, what would be a good side hustle idea right now? I don't know. What would be a good side hustle right now? I mean, I think you have to kind of think about your local area and what it is that you have, as far as the advantages for your particular spot. Like, I mean, if you live out in the Midwest somewhere in farm country, I doubt you're going to have the same, situations like you would have here in Astoria. You know, I mean, people asked me this one before, and I've thought about this one quite a bit, and I really don't see a whole lot of people doing it yet. But you could probably have one heck of a good handyman service around here, and you really wouldn't have to do that much. You know, like I met an old couple who literally could not find somebody to change the damn beeping smoke alarm, right? To change the battery out of the smoke alarm, and it was driving them crazy. And you know, they're an old couple, and like they're scared to get on a ladder, and that's totally reasonable. I mean, they slip and fall. I mean, deadly fall or something, right? So you know, this damn smoke alarm's way up on the ceiling, and they can't get to it. And they were willing to pay a lot of money so they could get a peaceful night of sleep, and they had it, and they were willing to pay it. And I was like, I'm sorry, I can't really think of anybody offhand you could go up there and change that right now. But just little jobs all over the place around here, because we have this huge retirement community that's moving here, and we don't have a whole lot of the working class. They're leaving because it's too expensive, right? So now, like, just a regular old average handyman that you could probably find just about any town that you go to, there's not as many of them, or they're just in huge demand right now around here. So because there's just not so many of them. So to me, like, that would be a pretty easy side hustle to do, you know, for me personally, right? But then there's all kinds of, like, you know, more tech, you know, newer age kind of stuff with like DoorDash and, you know, whatever. If you're not into that kind of thing, you know, figure out how to produce something, you know, make trinkets or something like that that you can try and sell. Make YouTube videos, right? You know, I mean, you know, there's all kinds of ways that, you know, you can make money on YouTube, you know, as far as not just you know, trying to, you know, get ad revenue. There's, you know, you can figure out products to sell and all kinds of stuff. You know, it's not just limited to one thing. There's all kinds of stuff out there. Mainly, pretty much what you really have to do is just find your passion, though, right? Find what it is that really, like, drives you and excites you, and you know, occupies your mind every day. That's what you really need to find. And then once you find that and you start pursuing that thing, the money will kind of flow, right? Like, that's the thing. Chasing money is very dangerous in the way as far as an attempt to try and make money, because it doesn't really work chasing it. There's some people that I know who chase money and do a really good job of it, but for the most part, it's not the chasing of the money that gets you money. It's usually the passion for something else that you are doing, and the money comes as a secondary effect, right? I know that's what happened for me in YouTube, right? I mean, I was making YouTube videos, and my whole goal for earning money on YouTube was $100. And that was the threshold that you needed in order for Google to pay you. So that was my goal, was to get paid one time from Google. And I was like, I don't care how many videos it takes. I'm just gonna, like, once I got it to the point that I had enough subscribers that I could become a partner, I'm like, cool, let's do it. And I would make like, yeah, a dollar off of a video if I was lucky. Like, you know, I was really lucky if I got it up to $10. You know, in fact, I remember the day that I made $10 on a video. I was like, holy moly! Like, if I do this every day, I could have like a car payment or something. Like, you know, I had 300. Of course, this was, you know, 2017. Yeah, but you know, that's really what I thought. I was like, oh my gosh, you know, $10, and you know, that was really, like, really exciting for me at the time. I was just, I never thought I could ever get paid to do a video, you know, let alone get paid $10 to do it. And the channel started blowing up, and it really started taking off. And again, I was just making videos. I didn't really think about the money or making money on it. And the money started flowing, and man, when lumber took off and I started getting a lot of attention, and my videos are getting, you know, 50, 60, 70, 80,000 views per video, you get paid pretty well, you know, for that. So during that time, you know, yeah, it ran in pretty good, you know. I mean, the YouTube the ad revenue was doing quite well. And it was all like this perfect timing, because everything that was leading up, I mean, we've talked about this many times on my channel. In fact, I just did a video talking about this, where it's like everything was leading up. Like, I just had let go of all the idea, like letting go of money on making money on YouTube, let go of like all kinds of stuff. And here I'm being forced into a direction, right? You know, you have to buy a house. Here's the money, here's a house, go get it. And I was like, this isn't what I was trying to do, you know? And it was like almost as if, you know, something else was saying, no, you don't have any other choice in this matter. This is the direction that you're headed. There you go, all right? So again, like, I didn't try to do any of that, but I was trying to make my channel popular. I was trying to make videos. I was trying to do, you know, try to get my my information out from the lumber industry. You know, I was trying to do all that stuff, and I was following that passion and putting those videos out, and all the other stuff was secondary. Like, I didn't really try to do any of that stuff. It just kind of happened, you know. And even now, like, I'm trying to understand again, because I feel like I lost a lot of energy that I once had when I started the channel. Like that, you know, that drive to you know, really be, you know, inquisitive about what's going on in the economy, and trying to be like very useful and informative, and, you know, bringing, like, you know, not only just information but entertainment to it, you know, and having a lot of fun, and, you know, feeling that energy when I was doing it. And I feel like I lost a lot of that, you know, that you know, a lot of that has disappeared over the last year and a half or so, you know, basically since I got the house, you know. And you know, you can almost recognize it a lot in some of the videos that I do. You know, at times, like, you know, it gets better, but then for the most part, I just feel like it's kind of depleted a lot. So I'm trying to get that back, right? Try to find that original passion that I had for doing YouTube, to bring that energy back, to bring that, you know, excitement back for the viewers as well, so that they're entertained and enjoying the information and the, you know, the growth of the channel and stuff. You know, the last thing anybody wants to see is somebody just sitting around being stagnant, right? You know, you want to see the growth happening within it. And I feel like I've lost a lot of that, and I need to get back on that path, because really, it was exciting. It was a lot of fun for me. And, you know, feeling like I get to do YouTube was a whole lot better than feeling like I have to do it, you know? Because I don't want the videos to feel forced. You know, I want them to feel like, you know, they're flowing out like they once were. They were just coming out. I wasn't even like, even the videos, I was like, man, where did I even come up with that thing? It was just amazing. They were just happening almost. You know? All right, what time is it? 2:30, guys. I'm gonna jet out. It has been so awesome hanging out with you this evening. This has been one of the greatest live streams. I mean, what a great time. Good comments. Lots of, like, you know, encouragement. You guys are just so awesome here. All right, let's see here. Let's go down to the very last comments. There was, okay, did I see a super? There it is. Okay, I was looking for that super chat. All right, the Django Geek, thank you for the $5, man. I sold some stock I was holding for 9 months just to break even. After the sale 3 times, I'm mad at myself. How do I apply your philosophy of letting go? Letting go of outcomes is very difficult, right? You kind of almost have to understand what it is that you have, like, what is it that you're expecting from the feelings that you were having, or the experiences that you were experiencing at the time, right? If you have this outcome based off of it, and the outcome doesn't come, then you get very frustrated by it, right? So it's very difficult to not have, like, this expectation of an outcome. But that's really what it comes down to, is the energy that you are putting into it is the exact same energy that you're going to get back out of it. So if you're worried about it when you're going in, then you're going to have this worried energy that's from that, right? And it's like, maybe not so much with the stock market, but definitely in, say, engagement with other people, right? When you're talking with other people. Because it really works. It doesn't matter if it's like a person or a thing or money or stocks or whatever. It all kind of works off of the same principle of this energy that you're putting into it and the feeling that you're having from it, right? Now, in order to really, like, let go of, say, the attachment to somebody else, or say the outcome of something, or the expectation of having something, right? You got these expectations and you're having a hard time letting that go. The easiest way to let something go, right, is to feel like as if you already have it, right? And I know that's very difficult for people who are like, oh yeah, it's easy for somebody to say, you know, but when you don't have it, you don't have it, and it's hard to feel like you do have it. It's not having it, right? That's the that's what a lot of people have to understand, that it's not having the actual item. Okay, it's the feeling that you want from having it, right? Now, for me, money, right? Like, I pursue, like, I look at, I think about, and money is like a very common thing that's in my head, right? So I'm thinking a lot about money. I kind of have a very unhealthy relationship with money, right? In the sense that I stash money, right? I have money kind of, you know, in spots, and that's left over from, like, not having it, right? And feeling like I wouldn't be able to maybe pay a bill or support my family, or, you know, for whatever reason, like something would come up and I would be deprived of or be short of money. I wouldn't have enough of it. So, like, to me, I started stashing money or having this money. I got to have this money, right? And I wouldn't let go of the idea that you don't need to do that, right? You don't need to do any of that stuff, because it's not the money that you're trying to stash. What it is you're trying to get a feeling from having that money. What is that feeling, right? What is it that money does for you that you feel that you need to do this? Now, is it the feeling of, like, security? You know, is it the feeling of, like, you know, that safety or something by having it? You know, what is it that you feel? And if you can feel that without the money itself, then you realize that it's not the money that you're going for, right? It's that feeling of security that you're actually after. So if you can feel security, then you don't have to chase the money anymore. And now the money can flow freely to you, right? It's a lot easier to deal with it. And that's the same with just about anything else out there, right? Even right down to your stocks. Like, what is it by having this stock that you want it to have you feel, right? Do you want it to feel like it's going to grow over time, or do you want it to make you a bunch of money, right? Or are you in fear that it's going to lose you a bunch of money, right? See, like, what is it that this thing is making you feel? Because it's not usually the item itself or whatever. It's a feeling that's coming from it that is really what you should be focusing in on, right? Once you have that feeling and you understand, like, what it is that this is what you're trying to get this thing to provide for you, or whatever, then you can realize, man, I don't need that. Like, I don't need that thing to feel secure. I don't need that thing to feel, you know, loved, or whatever it is that you're going for. I can feel that all on my own, right? And once you have that feeling, you create an energy that is very magnetic towards those things. And now you have the availability to bring those things into your life. Letting go is a difficult one. It's hard to wrap your head around what it is, because everybody they're hung up, right? They hung up on expectations, or, you know, fear of losing, or, you know, what if, or whatever, you know, and all these things. It's just human nature to be that way. But again, letting all that go then gives you the ability to then start bringing in other things into your life that you would never have expected before, because you had built up such a wall that says, I can't let this go, right? I got to have this job. If I don't have this job, I won't make the income. And if I don't make the income, I won't be able to pay my bills, and then I'll be out on the street. I got to have this job. I can never possibly have any other job other than this job. No, let it go. You might be able to have another job, right? Same thing with everything else out there. Okay. Nice ending. Uneducated Economist. You guys let me know. Thank you all for being here. I just want to make sure I give you one more thanks. Thank you all for being here. We had 140 of you make it to the very end, 178 likes, $39.64 in super chats. Thank you so much for all the support for the super chats, and, you know, encouraging the Uneducated Economist with all the supportive comments and just being here and engaging in the conversation. Excuse me. I got the hiccups now. Thank you guys. Uneducated Economist. You let me know.